we start looking at things like, well, what do they do? So it all looks good. Do they have brands? Do they have control of distribution? Do they have intellectual property? Do they have an installed base of software or equipment that they service and sell spares and so on and upgrades to? How do they do this? We've got to have an understanding. How do they get to those numbers?
Hi, folks. I'm absolutely delighted to welcome today's guest, the legendary British investor, Terry Smith, who's calling in from his home on the island of Mauritius, where he now lives. Terry is the founder, CEO, and chief investment officer of an investment firm called Fundsmith. His Fundsmith Equity Fund is the largest stock fund in the UK, I believe, with more than 27 billion assets under management. Bloomberg, which includes Terry on its index of billionaires, often describes him as the UK's most popular money manager. He's definitely one of the most successful, with a cumulative return of over 600% since the fund's inception in 2010, which is roughly 200 percentage points or so better than the MSCI World Index. Terry, it's lovely to see you. Thanks so much for joining us.
Nice to join you. Enjoying it so far.
So far, we'll see how it goes from here. We're off to a good start. I wanted to ask you about your early years. I've read in different places that you were born in the East End of London in 1953, and that you came from a very modest background as the son of a guy who I've read in different places that he drove a bus or he drove a truck. And my sense is either way that it was a relatively poor area that was probably damaged a lot by the Blitz when you were growing up in the 1950s. And I wondered if you could just give us a sense of what it was like growing up in the East End, what your family was like, and really how those early years shaped the person you'd become.
Yeah, I mean, it wasn't a very nice place. As you rightly say, I mean, it was still very damaged by the war, the Blitz in particular, with lots of bomb sites, and some of the housing was prefabricated housing, which was built for temporary accommodation. It was a very poor area. If you look at the statistics of the time for what it was worth, in terms of educational facilities and achievement, it was the worst metropolitan borough in Western Europe at that time. West Ham, which is where I technically was, Forest Gate, West Ham, which is where I was, pretty poor. The story I always tell people just to illustrate it is I went to Odessa Road primary school, and in the very harsh winter of 1963, we had outside toilets and they froze over. And so we were sent home from school. And when I say sent home from school, I don't mean for the day. I mean, this lasted for about 6 weeks or something like that. And that would have been great, apart from the fact we also had an outside toilet at home, which also froze over. So it wasn't a big help. And the house I lived in with my grandparents and my parents and my uncle and various other people was a very modest house, which has been knocked down in a slum clearance program since I lived there. And it had no hot running water, and it had no bathroom, and it had no inside toilet. I mean, that's kind of where I was. And the one thing I would say more than anything else about all that is it gives you a big incentive to try and do something better.
And tell me about your parents.
Yeah, my father was, as you've touched upon already, a lorry driver, truck driver, very talented driver. You don't have to be to drive buses and lorries, but he drove other things as well. Worked for a company. His undoing was he worked for a company in Barking in Essex, which amongst other things made brake linings, which I guess was where he got involved with them. And the problem was that they used asbestos, and that was his undoing. He got people say asbestosis, but that's a kind of loose term. He got mesothelioma and lung cancer and was wiped out by that in due course, as was the entire shift at the place. And my mother worked in various very, very, very modest jobs. She was a cleaner. She worked in a factory making dartboards. She worked in a factory making brooms and so on. So it is a very poor sort of background, frankly. Yeah.
Where do you think you got your intelligence from? Were both of your parents really smart, or?
My father, I think, was one of these people who was trapped by his background. He was one of 12 children, which is pretty amazing, and had to leave school at 14 and go to work, so there was no alternative but to that. But he was clearly a very intelligent man. In a time when people did crosswords in newspapers, he regularly won crossword competitions day in, day. And every week a book or something would arrive where he was winning cross. And he did eventually, before he died, aspired and became a manager of a cold storage transportation facility and things like that. So he was clearly a guy who had native intelligence, sort of brain power, who hadn't had the education to be able to capitalize upon it, I would say. You know?
Yeah, I often think my grandfather, who grew up in London and who left school at 12 because he was like this poor Jewish kid and didn't have, from an immigrant family, and didn't have, at a certain point, the sole in his shoe had worn out so much that he actually couldn't even hold it together with newspaper because there was nothing to hold the newspaper in. And so he became an apprentice tailor, but he was a world-class bridge player, which makes you realize, oh God, how much intelligence there must have been that sort of got wasted because they were just doing these menial jobs or really, really underpaid jobs. Do you feel like you've been very much shaped by that background? I mean, I know you've said before that money was important to you.
Yeah, money and just a feeling of wanting to escape as much as just money. I mean, the thing that more than anything affected my thinking, which is strange, people always ask things, and there are teachers I could talk about, and my mother I could talk about, but one of the things was in 1968, I went to the ABC cinema in Upton Park, which is between us and the West Ham football ground, and I watched the Thomas Crown Affair, the movie. And as I always say, it's Steve McQueen. That's a pretty good start. He's wearing several row suits. He drives a Rolls Royce, flies a glider, and plays polo. It's like, and I literally watched this thing and thought, there's another world out there, isn't there? There's just another world out there.
That was the start also of you wanting to collect all of these beautiful cars that had been in movies and the like.
Yeah, I've got that Rolls Royce, but partly that. And my father as well. He was very interested in cars and motorcycles. And one of the earliest photographs I've got of me is of me sitting on my father's motorcycle. So I could sort of ride motorcycles and drive cars, fly planes and helicopters and things from relatively easily. He definitely had a talent for it. It wasn't just that he drove buses and trucks. He had some talent beyond that, I think.
So now the image I have in my mind, Terry, is that you're sort of the Steve McQueen of the investing world.
Well, as it happens, Steve McQueen's first name wasn't Steve.
It was Terry?
Yeah, Terrence, as is mine.
That's interesting.
I'm sure it's just a coincidence, as they say.
Yeah, they named him after you.
No, he was born before me. So
no, kidding. I know you're a big fan of boxing, and you've talked a lot about, and then became, I think, a Muay Thai.
I do Muay Thai pretty regularly. I've been to Thailand a couple of times and stayed in Muay Thai camps for weeks and trained at Muay Thai, and I do Muay Thai. I sponsor a Muay Thai fighter here in Mauritius. She's actually in Cambodia at the moment. She just fought for a belt in Cambodia, but I train with her most days, and I've got a kickboxing gym here in Mauritius, which I bought and equipped and gave to the coach and the kids to use. And I turn up occasionally and train and spar with them. I'm a kind of a curio. I'm this old white guy who turns up.
And does this grow out of coming from a relatively tough area as a kid? Like, tell me about that.
Well, I went to Stratford Grammar School. The school uniform was an owl. In fact, I went past it quite recently, and the concrete owl statue is still outside. And so the badge was an owl, which was on your cap and your blazer. And I had to walk past the secondary modern school on the way home. And so I got into a fight more nights than I didn't really on the way home. You can imagine some kid going to the sort of the local posh school, as it was regarded, a bit, coming home with an owl on his head and his blazer was I may as well have just drawn a target, And so my uncle who lived in the house, my Uncle John, was, amongst other things, a boxer. And so after a bit of this, he said, I think I'm going to teach you how to fight. And so he did. And it was something I liked. I've always liked, I've felt at home going into boxing gyms. So, in boxing gyms, whether they're in London or Mauritius or New York, I've always kind of liked the atmosphere of going into them. It's I said here when I was setting up the gym for the kids, I went to see them in a municipal where they had no facilities, where they didn't have a boxing ring and they couldn't keep their stuff there. Right? And I went in there and somebody who knows I'm a bit of a softie for these things took me along to see them and train with them and so on. And they said, well, what is it you most like about this? And I said, they just remind me of me when I was at their age, This is their outlet. This is something which they probably look forward to every week,
What do you think you were like at that age?
Probably shy, intense, I would say, probably, at that age. A sponge.
A sponge, yeah. I read an article that you wrote, I think back probably in 2011 when Smoking Joe Frazier, the great boxer, had just died relatively young, I think 67 of liver cancer. And there was a beautiful quote there where you quoted George Foreman saying, I kept knocking him down and he kept getting up. After 6 times I was awarded the championship of the world, he was still trying to get me when they stopped the fight. And I was wondering, that seemed to me, there's something about that resilience and determination that clearly resonates for you personally.
I much admire people like that. I mean, people, obviously, Ali, certainly in that era, was regarded as fantastic. And he was, but he probably wasn't the greatest professional heavyweight of all time. I think Joe Louis and Rocky Marciano have got better records. He probably wasn't the greatest heavyweight of all time. Teofimo Stevenson, the Cuban amateur, had a fantastic record as well. But he was a huge global personality. And in so being, he needed, and that's why I tried to bring out the article, he couldn't be that on his own. He needed to find other men. And Foreman and Fraser in particular, but also Ken Norton and some others, if he hadn't had those, he couldn't have been great like that. But those men that he thought were different to him, because if they weren't different, it wouldn't have worked. They need to be different styles to engage the enemy. And one of the things that I think it brings out is that your enemies and those you engage with shape you. The way that you engage with them and so on, it shapes you. And one of the sort of common sort of thoughts that people have on Smoking Joe was that he was a sort of slugger and so on. He wasn't. He wasn't that. He was. If you look at the analysis of the first fight, the fight of the century in Madison Square Garden, where he knocked Ali down and broke his jaw, Eddie Fuchs, his trainer, had trained him very specifically. He worked out that Ali couldn't throw an effective uppercut and was vulnerable at that point. And so he said, whenever you get within range, you throw. And eventually he caught him throwing this uppercut. And it was just a piece of Eddie Fuchs. So boxing is, people think it's just violence. But no, there's a fair amount of analysis goes into successful boxing as well. Eddie Fuchs trained 4 of the 5 men who beat Ali. That's probably not a coincidence.
When I think of your life, and we'll get into this obviously a lot more as this conversation unfolds, there is something about your reputation as being this kind of combative guy, and there's also something, I think, just in terms of the drive and the grit that it must have taken for you to get out of the East End of London and become a billionaire and be as successful as you've been. When you think of yourself, does the image of you as a fighter, as someone who's kind of defiant, is that sort of your and combative and determined? Like, what's your own image of yourself when?
I don't really see myself that way. I think I'm a big softie, actually. I really do, And I think I am in many respects. I think a lot of people who know me well might tell you that, as opposed to the sort of the public image that people have got. If you look on my WhatsApp where you can put a phrase, I've got a phrase up there. I like movies, by the way. Apart from the Thomas Crown affair, I finance movies a bit as a hobby. It is a hobby. It's not really an investment. And I have movie night once a month with friends. I've got a little private cinema and I run that, et cetera, et cetera. The quote is from the movie, the cult movie Assault on Precinct 13, which not many people will have heard of now, but it's about a convict who's on the way, I think, to the death row, and he's been in a bus. The bus gets diverted to a police station, which is closing down. And there's some suspect in there who's been involved in a clash with the gang. And the gang come and attack the police station to get him. And of course, it ends up with the convict, a girl, the policeman fighting for their lives against all this. And at one point, the girl says to him, what I can't understand, she said, is why you didn't take off, because they sent somebody out to get help. Why didn't you take off down that drain and just leave it? Because then you could have escaped. And he says, there are 2 things in life a man should never run from, even if it costs him his life. One of them is a man who's helpless and can't run with him. And I like that. I like that approach, basically. And I don't think it's a somewhat more selfless approach, I think, than the one that people might think that you're talking about portraying there. Of course, the quote ends, people think that the quote, which ends there, one of them is a man who's helpless and can't run with him. And the quote ends there. They say, you've only got half the quote. So no, the quote does end there because the girl says to him, what's the other one? And he just looks at her. The tooth should run. Yeah, I'm a big softie, really.
Yeah. Well, as the great poem said, we contain multitudes, right? I mean, you can be a softie and also be pretty tough.
Sometimes. Yeah. I think that's right. I would say it's a bit like that. It depends upon the circumstances and the situation and who I'm with and what I'm doing and lots of other things. But look, you don't get out of where I was to where I am without a lot of determination, obviously.
Yeah.
My classmate, who is my best friend in school, who I'm still in touch with, but I'm in touch with both him and the guy I sat next to when I was 5, which is interesting. And he assures me that out of the sort of the boys in our class, the only 2 who are at liberty and not dead are me and him.
Really?
Yeah. Yeah. He kind of, because he stayed in London and kept in touch a little more than I did. He sort of says, "Stop. You know, the only 2 guys who were left alive and not in prison."
Huh. That's amazing. That's amazing. Huh. So did you have great role models in those years? I mean, was there a teacher or an athlete or someone, I mean, or people you knew who invested or did well in business? Was there anyone you looked to and you thought, beyond the movies, let me be more like them?
Anyone in business. So, I mean, I couldn't possibly have started there. I mean, business wasn't something I encountered other than doing various menial jobs until I was in my 20s. And I had a good primary school teacher, Mr. Whitehouse, my last year of primary school. He basically, I guess if you said, what did he do, if anything at all, he probably gave me help, impetus, if you like, to pass 11 plus and get to the best grammar school in the area. I remember him fondly, although he was quite tough sometimes, I mean, this was an era of corporal punishment, I mean, he was quite tough. And then when I was in secondary school, Dennis Blow, my history teacher, who, bear in mind, nobody in my family had ever been to university, right? So, getting the grades and going to university was a process. Applying for university, which I couldn't go home and say, what do you think I should do? It wasn't going to work terribly well. And so he kind of helped me with that. He was a history teacher, and he's the guy more than anybody else kindled my love of history. And I went and did a history degree at the university that he himself had attended. And that was a big help when I think about it. I could have done other things at other universities, and people say, oh, you could have got to Oxford, Cambridge, you could have done it. But I'm very happy that I did what I did, because I had his sort of help and support in thinking through that process, in doing it. And lots of differences. Going back to the, grit and determination, my mother was the kindest person I think I've ever met, as far as I know. She never harmed anybody. She would be mortified if she harmed anybody, Sort of person who, I mean, obviously we're dealing in a different era in terms of going into shops and buying things. If you came out and the shop had given her too much change, she would be back in there giving it to them, right? She'd be mortified by the idea. And her kind of, what people would now call moral compass was quite an important thing, I think, as well, in terms of how she treated people, I think. My Uncle John, who I mentioned earlier, he was a boxer and sometime villain. He was a good guy.
What sort of villain?
A villainous villain. That's all, I mean, this was the East End of London, the craze around the East End of London during this period. He was a guy who was involved in operations of that sort.
Yeah, interesting. Very interesting. And so then to get back to your trajectory of your career, you had gone to Stratford Grammar School, this very good school. And I think I'm right in saying you won the physics prize. You were obviously a smart kid. You went to the university in Cardiff to study history. I think I'm right in saying you got a first-class degree, graduated in 74. And then you went off and got a job at Barclays. Well, you were there for 9 years, right? Starting around 1974. And it was not glamorous when you started. I mean, you joined as a graduate trainee and ended up becoming a bank manager. Can you talk about those early years at Barclays and, how it sort of shifted you into a different world and different way of thinking about the world?
Again, we'll talk about mentors a bit, probably. But I chose Barclays. I mean, I didn't have a clue what I wanted to do when I was in university. So I went to all these so-called milk round interviews where companies come, and I was interviewed by the Metal Box Company, by Unilever, by Marks and Spencers, by Barclays, by NatWest, all these companies. And how to make a decision. I made it on the, you might consider perverse basis of the one that gave me the toughest interview. I thought, I'm going to go with him. Guy called Roger Brocklehurst. I remember him well, gave me the toughest interview. I thought, I think I like these guys. So I went and worked for them. It was a training program. They put me through courses on everything you can imagine, law, accounting, etc., credit, through all that, which is very good. And I always say to people ask me for career advice, I say, get a job, take all the training courses. Number one, right? I think it was Lucy Kellaway writing the FT said that sort of the dot-com era of the gig economy and the digital age have done a great disservice to some young people who just want to start a business. No, go and get some experience first, right? Go and get some training first, then have a think about all that. So I did all of that. And then Barclays had nearly gone bust in the 73, 75 secondary banking crisis. And their own management accounting was lamentable. I mean, they had none, basically. They had audited accounts, which were produced 3 months after the year end. You could look at them and see the balance sheet and the income statement, cash flow. But actually having a budget and monitoring against budget and working out what your exposure was to assets and liabilities and interest rates and nothing. I always said, when I discovered this, I said, we would never have lent money to a company with our level of management information, right? Anyway, what they did was they grabbed me out of what I was doing in training for commercial banking and sent me off to do an MBA. They sent me to Henley, to the management college, and I did a very peculiar or different kind of MBA, one with different, you did 3 months in classrooms, 3 months in a company, 3 months ago. And I did that across different businesses and learned a lot of different things, like production engineering and human resources management, all kinds of stuff like that, manpower planning with different organizations. And they told me this, but they were going to form a finance department. So they had a guy called John Spencer, who'd been with Pete Marwick, and they made him head of the department. They made a guy called Derek Van der Weer as the first sort of CFO, really. This guy, John Spencer, who I'm still friends with to this day, still work together with to this day after nearly 50 years. And a guy from Slater Walker, which had blown up very recently, the Jim Slater acquisition, me and a couple of other bods, and said, you're the finance department. And like, what do we do? We wanted to create this management accounting, management information, budgeting, forecasting, planning thing from scratch. And so I got to sit there and do that for the next 3 or 4 years. And that was great. And I had a good boss insofar as he was a good mentor. And he really liked to go sailing. And I got one of those deals, which I think you do get sometime, which is I did his job when he was away, which meant he could go off for 6 weeks and go sailing. And so I learned an awful lot. I got an awful lot of early responsibility doing that. So I was basically the manager straight underneath the CFO, managing the bank's finances, if you like. And
what do you think you learned by looking under the hood and actually? Because obviously, I mean, this has been part of the key to your success as a stock picker is that you understand the accounts. What did you see by actually being on the inside and looking under the hood?
Loads of things. I mean, lots and lots of things that you see. I mean, one of them is cash flows and profits are completely different things. I mean, they are clearly related. Accrual profits or accrual accounting is a way of spreading cash flows across reporting periods. But, you can have plenty of profits and go bust. It's, it's the two things are not that, that you've got to be very careful with businesses that require leverage or borrowing in order to function, which banking does, right? Because the margins for error in terms of success or failure are very slim at that point. When you're on 20-to-1 leverage or something like that, it doesn't take long to go bust, you can do it quite quickly by taking risk, in that regard. So there are lots of things I've done, but in the course of doing that job, in those days, the investor relations industry, which we've now got, where companies have IR offices, didn't exist. There was no such thing. Nobody had one, not even one. So what would happen is these people, brokers, analysts, would ring up and they would asked for the finance director, who didn't like taking their call. So he put them through to my boss, but he wasn't there. So me. So the phone would ring and it would be a bank analyst working at a stockbroking firm in London or New York, wherever, who would start questioning me about the results or the forthcoming year and what was going on and where we were positioned in relation to property lending or less developed country lending or whatever. And I dealt with all these people and that was fine and learned quite a lot from them about how the market viewed us. Over time, and I had investors who would come in as well, from Capital Group, people like that, and they come in to interview, and I would tell them about that. And then eventually, one of them said to me, "You're wasting your time. You know that, don't you?" I said, "What do you mean I'm wasting my time?" He said, "You're going to do very well." I said, "Yeah, they've told me sort of I'm on the sort of fast track up towards the board, possibly, or something like that one day." And he said, "I'm absolutely certain." He said, "But you're just going to have a career and you're going to be quite an important guy in a bank and then that's going to be that." He said, "I think you should come and work in our industry where the rewards are much greater. Obviously, if you fail, then there's not the same sort of parachute that you might get in your job here." He said, "But I don't think you will. And he said, you're far more like you. This is a partnership. You'll end up being your own boss. He said, and I think you get it. And I said, oh, okay. So I quit the bank and went off and became a bank analyst. Much to the shock of everybody involved, who increased the managerial turnover by literally 100%. People don't quit and go off. I said, well, no, I'm going to be a bank analyst. And I went and I joined a stockbroking firm. And I became a bank analyst.
So you went off and you became an analyst, I think, first at a company called W. Greenwell and Company, and then you ended up at Barclays Deloitte Wed, which was where you were until the late 80s. And there's a famous story told about your time there. I think about a week after you joined as a banking analyst, that sort of cemented your reputation as someone who would speak your mind, even when it annoyed the hell out of people in positions of power. Tell us what happened.
It wasn't actually a week after I joined. I mean, I joined sometime in the summer of 1986, just before Big Bang in London. And then I wrote a piece on the bank sector, piece of research in the run-up to Christmas, and left it for publication. These were the days when you left it, the publication department ran it out and mailed it to people. And I went off for a holiday. I can't remember where I went. So I said, I'm going away over Christmas and New Year. And I left my number two in charge of everything. I've got this research. Anyway, he went out for a lunch in the days when people did go for a lunch with the FT banking correspondent and gave him a copy. And of course, on the first working day of New Year, there was absolutely no news anywhere in the financial world. So the front page article of the Financial Times says, BZW says sell Barclays. And of course, I mean, everybody went completely crazy about this. That wasn't allowed. People didn't put out sell recommendations generally. Anyway, you're doing it on the company that. And I said, well, yeah. And they go, look, through gritted teeth, the management of Barclays said, yes, this is absolutely wonderful. It proves the independence of our investment banking subsidiary. And the boss said, I think you're going to have to leave because you've got no career here now. That's it. And so I left. And that was that. I've kind of, not for the first time, I've reclaimed the moral high ground a notch too high for people's comfort zone. I've got to say, looking at what happened subsequently with Barclays, I was right, because this was 86. And by the turn of the 80s into the 90s, they ended up cutting the dividend because of the size of their property losses. So I was talking about their inability to lend without incurring higher than average bad debts, was basically the thesis I was putting forward. Yeah.
Then there was an even more dramatic reprise of a similar story where you end up at UBS Phillips and Drew. So in 1990, became head of UK company research there. And for people who don't remember this firm, it was a pretty prominent investment bank and stockbroker and asset manager in the UK. And I think Phillips and Drew had been founded in like the 1880s and then acquired by UBS. And so you come in at an interesting time, right, where there are all these companies like Polypec and British and Commonwealth that were going bankrupt while seeming to be in good health. And you wade into this with your usual delicacy and gracefulness and tact. And do what? Tell us what happened.
I probably did show rather more tact than you're giving me credit for. So I, together with the guy who was a transport analyst, I worked with him on it, I said, why don't we write a piece of research about why this is happening, why we've got companies which are reporting record profits and going bust 6 weeks later, big companies, right? And so we wrote a research paper, probably 30 pages long, which looked at 12 methods by which companies cook the books, right? That they managed to report profits that didn't exist or profits without cash flows or got liabilities out of the balance sheet. And we wrote that. And it was, for what it's worth, voted the best piece of research published in London that year by the sort of Reuters. So you need to back up a bit. Why was I hired by UBS? They'd been involved in a thing called the Blue Arrow affair shortly before they hired me. Blue Arrow was a UK shell company run by a man called Tony Berry, who owned Spurs, I think, for a while, the football club. And he used that to bid for a company, a much, much bigger company, because this was a shell company called Manpower, a temporary services company based in, employment service company based in Milwaukee, Wisconsin. And it was a huge acquisition, and they did a £750 million convertible, which sounds quite a lot of money, but try and think back to 1989 in terms of the size of that deal. It was done by the lead banks were Barclays and NatWest, so BZW and UBS and NatWest. The issue was a complete flop because the deal was a complete lemon. And instead of admitting that they were stuck with the £750 million, they put it on their market-making book, which was exempt from disclosure. Now, this was regarded, when it became apparent, as a bit of a foul by two people. One was the institutions, because a few of them had bought these bonds, not very many, But they thought the whole issue was solved because they published newspaper sort of advert saying successful issue, triumph, da-da-da. And they felt a bit of grief, so they stopped dealing with people like UBS over it, and the regulatory and sort of police authorities who went and arrested the CEO, the head of research, the head of trading, and the head of sales. And so the headhunter rang me up and said, because I'd been a bank analyst for a number of years, successfully 7 years, I think I've been a bank analyst. So I'd like to do something more. I'd like to do something looking at the whole market, wider scope of things rather than doing banks forever. I think I know quite a bit about banks, and I'd like to do something new. And so he rang me out of the blue and said, look, UBS have got a vacancy because of these arrests. They'd like to hire you. And I sort of said, oh, okay, fine, I'll go for that. And I sort of said, well, what do you want out of me? And they said, look, obviously we want to be profitable. We want you to reclaim the moral high ground with the institutions who you've got this, it comes back to the BZO, you've got this reputation for telling things how they are. And we'd like you to use that to rebuild our reputation in institutions. So I said, sure. So I published this piece of research, and that was all very well done. And so then I got a phone call from somebody at Random House, the publisher, and said, we think that we could sell a book if you could write a book. Could you write a book based on that? I said, yeah. So I went to the UBS management and said, I've had this approach. I think it might be a good idea because you're trying to do this more high ground stuff. And they said, yeah, good. I said, I think this will be a sort of another sort of, a feather in our cap to doing that. What do you think? They said, yeah, if you want. So I said, do you want the book to be UBS's book or Terry Smith's book? I said, Terry Smith's book. I said, fine, okay. So I wrote the book. And of course, the thing is, other people have written other books on creative accounting in the past. Wasn't the first one by any means. But if you look back to some of those, they used company A buys company B, and I actually used real companies, right? And when we got towards publication, the publisher said, you quoted and you reported in there. I said, yes. He said, I think you need to write to all the companies and tell them that you're using that in case they wish to claim copyright. I said, it's a public document. And they said, write to the company. So I said, okay, fine. So I wrote a letter to all the companies saying, I'm Terry Smith, I'm publishing a book on accounting. I'm going to quote from your 1988 annual report. Hope that's okay. Let me know if it's not. Of course, having seen who I was, and so a couple of the companies realized what was about to happen. And the next thing I know is I get called in by the chairman of UBS who says, we're going to stop this book, aren't we? I said, I don't think we can do that. And there was sort of, I don't think you've understood what I just said. I'm telling you to stop the book. Right? I said, I think you find the book's mine, not yours. Because that's what we agreed. Okay, I'm giving you the instruction to you go and tell them. I said, what reason shall I give them? Well, there's going to be a huge row over this, and I said, so I'm going to tell a publisher, note the connection between the word publicity and publisher, the same verb, right? That he's got a book on accounting, which he thinks is going to sell about 5,000 copies or something like that. But now there's going to be a huge part. I said, have you come across a book called Spycatcher that Mrs. Thatcher tried to ban? I said, it's mainly about a guy who was in MI5 complaining about his pension. I said, but it's sold out when she tried to stop. I said, we're telling you we're going to fire you and sue you. I said, okay. And so I got fired and sued. The book got published. The publisher regarded this as the funniest thing he'd seen, the best thing he'd seen for a long time. Stopped the press long enough to put across the corner the book they tried to ban.
It's amazing. I mean, you got suspended initially for quote unquote gross misconduct. Then you're fired. They sued you. So as I understand it, you had to settle out of court after about 18 months. But the book was number one and in the bestsellers. I mean, it knocked Stephen Hawking off. Yeah, well, you are the Stephen Hawking of the investing world, not just the Steve.
Compliment. Okay. But yes, it did. Yeah, I mean, but clearly it wouldn't have done that. They hadn't tried to. I mean, I hope some people might have read it and regarded it as quite. And no, the interesting thing is, I think it has stood the test of time in a number of regards. I think that's a more interesting reflection. Over 40 years later, over 30 years later, 5 years later, there are examples in there which stand the test of time. The one on pension fund accounting, I think in particular, stood the test of time in there. So I think it was an okay book. I don't think we'd have sold hundreds of thousands of copies without them trying to stop it and sue me and things like that. Though. Yeah.
In many ways, it made your reputation as somebody who was candid and had integrity and had the courage to tell it like it is. But also, it seems relevant in everything you did was based on a real understanding of the accounts, of the finances, which seems to have been. I mean, it sounds so prosaic, but that's kind of been one of your competitive advantages in an industry where most people don't seem to bother.
Well, they don't. No, I can give you as many examples as you prepare to listen and record to of where we know that people in the industry don't read the accounts. I mean, we have the accounts for a reason, you know? And they look at management slideshows and all kinds of, about reading the actual accounts. I mean, there's lots of examples of this. I mean, we had one on IBM. We looked at IBM in 2010 and rejected it. Wisely so, as it turns out, as a stock. But when we were doing it, we found that, I need to go look at the number, we found a $2 billion error in the cash flow statement for the last year. And so we sort of rang up the IR department and said, look, we're these guys, we're doing this, we're looking at that, we're just going to ask something about your accounts. There's this number in here that we can't make this work. And they said they did the usual, we'll call you back. And they said, look, we've been in touch with the financial department. You're absolutely right. The cash flow's out by $2 billion. We said, anybody else rang up? They said, no. And I don't think it's because other people had discovered it but couldn't be bothered. They just haven't read it. You know, it's like, oh, okay then.
It's very interesting. I mean, so it seems to me, I mean, just in terms of keeping score for our listeners and giving them and viewers and giving them a sense of some of the morals here. I mean, part of it, obviously, as you said before, is an emphasis on cash flow and due diligence. And part of it, it seems to me, one of the great lessons of your career is just focusing on economic reality over reported earnings.
Yes, I think economic reality is it. If you read what we do at Fundsmith, I'm be confident you probably have been preparing for this. Yeah, we talk about companies with high returns on capital and high gross margins and great cash conversion and growth and so on. But when we found those, and I mean anyone can find those, going through looking on Bloomberg or another data source to find them, you then have to pause and ask yourself a very important question: how do they do that? What's the economic reality, as you say? What product or service are they selling to people that enables them to generate good margins, that enables them to get good returns on capital, enables them to convert profits into cash, that keeps competition somewhat at bay? What do they actually do? And I mean, you do get investments in companies, particularly in the modern era, where people buy all kinds of stuff without understanding it, just on the basis of them mentioning AI. Well, right, okay, what do they actually do? And it's amazing enough. I mean, we've for years have maintained this. People have latterly, I think, come to believe it a bit. But if they actually speak in gobbledygook, it's not a good sign. We need people to tell us, in straightforward, which we try to do in what we do in investment. We try to tell people in straightforward terms what it is we do, and what we don't do.
There's a big chunk of your career that I'm sort of leaving out here that maybe we'll come back to later, where you were running public companies. But since you bring up Fundsmith and it's so relevant to our discussion here, let's dig in more to what it is you do here at this fund that you founded back in 2010, and that's become a really great emblem for what I would call the art of quality investing, which is a phrase you use in the introduction to your book, Investing for Growth, where you describe your approach as quality investing. There's a lovely phrase in that introduction where you talk about seeing an ice cream van that has an advertising slogan on the side, which is, it's quality that counts. So this is at the heart of what you do. Tell us about the attributes you're looking for when you're trying to identify these high quality companies.
In financial terms, we're looking for a high return on capital employed. Let's start with that. Warren Buffett said it's the single most important measure of performance in his 1979 annual report, right? For what it's worth. And he seems to have done quite well since then, so probably we should listen a bit, It is, because if you invest with me, you want to know what return you're going to get. If you're going to put your money in the bank, you want to know what return you get. Buy a bond, you want to know what interest rate yield you're going to get. What people invest in companies, they kind of ignore that. Well, no, you're buying your portion of their capital. What return do they get on that capital? That's question number one. Because there's a great Charlie Munger quote, which is, over the long term, the performance of your shares, if you hold them for the long term, will start to gravitate towards the return that the company generates. And he's not putting forward a theory here. It's a fact. And so we look at return on capital employed, and people look at all kinds of other things, earnings growth and so on. If you're prepared to give me access to capital, either by you sending me more or me retaining your earnings, and you ignore the return on capital employed, I'll generate earnings growth for you at lower and lower returns, which plenty of companies have done over time. See Tesco for details, right? It's like, it's a disaster, right? So we look at return on capital employed. We look at gross margins. We look at the difference between sales revenues and cost of goods sold. What do they mark things up by? Because companies take stuff in, they take in components, ingredients, services, labor, and they put a markup on it, right? And again, in normal life, you go into a shop, you can imagine them having a markup. Well, all companies have that markup. What is it? And the size of that tells you a lot of things. It tells you about their pricing power, their brand strength. It tells you about their defenses against inflation if the cost of goods goes up. And we obviously look at profit margins, but most people do. We look at cash conversion and what percentage of the profits arrive in cash. Is it 100%, 80%, 120%? There are companies that make more than 100% of profits in cash, usually by the method of paying people more slowly than they get paid. And that's beneficial, fairly obviously, because cash is the only thing in the end you can pay the dividend with various things like that. So we look at a raft of financial metrics for these companies. And every year we give that to people in terms of our portfolio and how it looks against the indices and so on and so forth. And then, as I say, we start looking at things like, well, what do they do? So it all looks good. Do they have brands? Do they have control of distribution? Do they have intellectual property? Do they have an installed base of software or equipment that they service and sell spares and so on and upgrades to? How do they do this? We've got to have an understanding. How do they get to those numbers? What drives them to get to those numbers? And then we look at things like the management, and not in the sense of, are they good managers or bad managers? Traditionally, what most people mean by that is they have a meeting with them and how did they come across? I've met people who can present brilliantly but are bad managers, and people who can't present to save their lives who are very good managers, right? It's like, no. Let's get to the nitty gritty of talking to these people and ask them all the usual questions. What's happening here? What's happening with that product and in this region? What we really want to know is every year, you have this company that produces this return, these profits and cash flows arrive, right? How do you decide whether to give it back in a dividend, buy back shares, invest in the business, or buy things, right? Those are your four basic choices. Two of them are obviously subsets of one, which is giving money back. How do you decide between those? And we're looking for people who've got a grasp of how that works and what they do, which is honest, and that matches something like the way that we think, right? So they go, well, actually, I've met managers, I've done projects for managers in public companies over years where they say, my stock's undervalued. Oh, now you're busy acquiring things. Yes, buying lots of things. Yeah, right. Why don't you buy your own stock? What? Why would I do that? I'd shrink. But surely the company you know best is not the company you're acquiring, it's the one you've already got. You must have done that pretty well, yeah? And you're telling me you think it's undervalued. By the way, I've checked and I think you're right. Why don't you buy those? No. And so you're looking for people who've got an honest and intelligible approach to that as well. So great financials. How do they do it? People who are honest and straightforward and intelligent in their application of this. That's it.
When you're interviewing management and you're trying to figure out whether they're rational in the way that they allocate capital, what do you find helps in terms of your meeting style? Like, is it better to be charming? Is it better to be combative? What actually works for you when you're trying to figure out whether these guys are rational in the way they think about allocation of capital?
Usually it's to try and start with going down the route of trying to get them to talk about how they view it without giving them too many clues, as it were, right? So, something like, well, how do you decide your priorities? I don't say anything beyond, don't say, you could do this, or you could do that, you could measure this. No, don't give them a roadmap. Just leave it as, obviously you want to point them down the route of talking about this, but you want to point them down the route of talking about it with as few signposts as possible to see whether they've actually got a framework, And sometimes they haven't got a framework. Combative, yeah, it may surprise, we're not usually all that combative. We are with people who we think in the end are trying to dupe us or just not listening to what we're trying to tell them, particularly if we own quite a lot of their shares. We will become, like we did with Unilever in the end. It's kind of like, guys, we will become combative because we've owned these shares for a long time. You completely ignored us. You're ignoring us now, and we don't think you should. And you're treating other people who arrived the last 5 minutes better than us. So we'd really like you to focus, and we will become competent. Like, they'd say, oh, we've got an active investor and we've invited him on the board. And it's like, great, but I don't want to go on the board. I would turn it down if they asked me. Not that it's ever particularly likely, but why are you doing that? right? Why? I'm trying to get them to the point. And we can get you managements who will give you, I don't think you want it probably, but we can get people managements who will give us a reference who say, Fundsmith turned up, they did all this in talking about our business, they bought a big stake. Then we had an activist who said, we've got to cut costs and we've got to split the business, we've got to do this. And not only did they vote against that, but they talked to the proxy voting agency and said, I think these people are wrong. What they're going to do is injure this business. Right? I mean, we will actually stand alongside them and fight for the business if we think that someone's doing something wrong in that regard. So far from being competitive, sometimes we're their best friend. You know?
One of the things that's very striking about your portfolio is that obviously you have a lot of these very well-established self-financing businesses with these high returns on equity and durable competitive advantages, very much Buffett-style companies, but a lot of them are really old. I mean, I remember you once saying that the average company in your portfolio was founded in 1883. I don't know if that's still true.
It's 1920 something, I think. Yeah.
That's extraordinary. Can you explain that? Because we're in an era where so many people are just obsessed with the new technology, right? And AI this and you know, biotech and drones or whatever it is. And here are you focusing very heavily on 100-year-old companies. What's going on here? Because it's not that you're ignorant about technology.
No, but mostly winners keep on winning. It's kind of the way the world is. The Stern Business School in New York produces a table. I think they produce it annually, and it's good or bad companies. And what they have is companies by sector, and they analyze thousands of companies. So they have the sectors. So there's consumer staples, consumer discretionary, pharmaceuticals, and healthcare, mining and minerals, banking, all these sectors, hundreds and hundreds of companies in each one. And they do a very simple calculation of whether a company creates or destroys value for the year that they're looking at. But they've got the data over many years. And what they look at is the return on capital employed, the Buffett thing that he focused on in 79 that we focus on, less a guess at the weighted average cost of capital. People get their knickers in a terrible twist about whether it's a guess, right? The exact number doesn't matter, all right? And so they take off a weighted average cost of capital and come, is it taking in money at a weighted average cost of capital and making a positive spread, in which case it's creating value, or is it making a negative spread, in which case it's a machine for destroying value? And then they show you the sectors. Let me tell you, almost every year they do it, you go, oh, right, so the good companies, the ones creating value are, they're consumer staples, consumer discretionary, healthcare, information technology, all right? And then what's all the bad stuff? Oh, it's banks, real estate, insurance, heavy engineering and manufacturing, mining and minerals, oil, gas, and transport, in particular airlines, are all bad, right? Now, every dog has its day, right? There will be a year somewhere in the cycle where mining is good or airlines are okay, of course there is, but good things don't become bad and bad things don't become good. Right. So that's the first point is, on the whole, we're not suddenly going to find all the good companies have become bad companies, all the bad companies. It persists. And the reason it persists is because of competitive advantages in those sectors. There are certain competitive advantages that those sectors and the leading companies within it enjoy. It's what Buffett calls the moat, the defensive mechanism. How do they keep those sharp elbows that keep you out, right? Because we can all look at Coca-Cola and see it's got good returns, but how are we going to get in there? And we've got to get past PepsiCo and Dr. Pepper first before we even get a crack at them. And they've got this means of defending themselves. And look, there's no doubt that we are in the era where there's been change. And we can sort of look around us and go, well, in the time that I've been in business, we've seen change in terms of computing and the internet and mobile telephony and social networks. And maybe we're seeing something now in AI, maybe not. I don't know. And it is a period of change. And there's no doubt that you've got to be alive to it. And I think we are alive to it. Not everything that we've got was founded in 1920. We've got Meta and we've got Microsoft. We've got some stuff that's more recent. But before we align upon the idea that there's never been more change in this, bear in mind I did a history degree. And you need to think back to earlier periods in history. Yeah, sure that this is the most change we've ever seen. Because if you were involved in the communications business across the last sort of 2 centuries, you would have started in the telegraph business where they put up wires, typically alongside railway lines, and you sent Morse code. That's how you communicated, right? Dot dash, dot dash. And then somebody came up with a means of having a microphone so you could have the voice. So we attached a microphone to the wires. Now we could talk to each other. And then somebody invented radio. And after we'd had radio in place for a while, two things evolved from that. One was we could talk to each other without being connected by a wire. That's different, isn't it? So, ships at sea and people who are traveling, could communicate. And not only that, you can communicate to the many. You could broadcast. That's a bit different, isn't it? Then along came somebody who said, never mind that, I've got this thing. You can look at each other while you're communicating. You can have television. Yeah, you can have either video or you can have broadcast television. Then along came the internet. So if you're involved in this, it's been a hell of a lot of change already, hasn't there, along the way? So, recency bias is something I think that a lot of people suffer from. It's tempting to think that we've got more change now than we've ever had before. I'm not actually convinced.
There's so much to unpack here. And I wanted to highlight a few things for our listeners before we move on, right? So one thing that's very distinctive about what you do, which is very much in tune with Charlie Munger, right? I wrote a chapter in my book about Munger and just not being a fool, avoiding standard stupidities. A lot of what you do is just avoiding certain things, right? So certain sectors you're avoiding, right?
Munger is great, I think, because he does have this idea that if you invest in good stuff, you'll be all right. Roughly speaking, you could take our entire investment philosophy and boil it down to that. If you've got good stuff, you'll be all right. That's it. That's it. You might not be the best fund, or you might not outperform everybody in the world, but you'll be all right. Good stuff. Sorry, I interrupted you in the middle of talking about Munger here.
No, it's such an important insight. I mean, and the ability to sort of make it very simple, right? Just buy good stuff. I mean, I remember you saying at one point, you don't need to own the absolute best stocks. You need to own a lot of pretty good, really good companies that are resilient and durable, and then avoid the crap. And so tell us how you figure out what bad companies look like when you're looking at the financial statements and you're looking for warning signs, because a lot of what you're doing is A, getting rid of lousy sectors, and B, getting rid of lousy companies.
I mean, an awful lot of it comes down to just knowing. It's like there aren't good airlines. I mean, people say, what about Ryanair? So every rule has an exception somewhere out there, but on the whole, there aren't any. And if you look at the last 20 years of data, it's lost something like 5% versus its cost of capital on average every year. It's a machine for destroying value. Right? That's just what the statistics tell you. So that's what analyzing the statements will tell you, either in aggregate or individually. Then you go, I wonder why they are a bad industry. It's not a thing promote. Every single major factor involved in those companies is outside their control. This is another thing to look for. You're looking for companies which have certain things they can control and work on the things they control. They don't worry about the things they can't control. They work on the things they can control. Airlines can't control the frequency with which you fly. The load factors vary, right? They can't control atmospheric conditions. Things happen to stop them flying from time to time, volcanic dust clouds and things like that. They can't control their main input costs, which are fuel, the oil price, staff, largely unionized, and so on, and the cost of airplanes. Basically, they are buying airplanes from two suppliers. And then you get onto this. Hopefully this is a rhetorical question. Is an industry a good industry or a better industry if there are fewer, from an investment standpoint, if there are few participants or many participants? Well, the answer surely is few participants, right? I mean, ideally one would be great, but if we've got to have it, a duopoly is okay. Visa and MasterCard, Coke and Pepsi, and so on. Last time I checked, and I'm sure I'm out of date before anybody sort of rings up or writes under your podcast, he's an idiot. But the last time I checked, and I haven't bothered checking for a long time, there were 3,000 airlines in the world. Then bear in mind this, out of those 3,000 airlines, quite a large number of the owners and operators aren't even trying to make money. They're national flag carriers, right? They're owned and operated by governments using your money. They don't care. They really don't care. Or they're owned by entrepreneurs who really like their names on the side of planes. It's like, so when you look at the sectors, you say, well, I've got the financial statistics, and it's the opposite of what we do. Okay, so the statistics are good. How do they make that? How do they make that happen? They're really terrible. Why? Well, we can look at all the reasons why. We can look at those terrible sectors and look why. If you look at mining and minerals or oil and gas or transport, including airlines, and banking and investment banking and insurance and real estate, it's dire. They're just dire sectors. You almost need to begin the discussion. about the individual company that somebody's telling you about. You almost need to think about it. Think back to the Stern Business School and its good versus bad. Trick here is when you get into a sector which is commonly populated by quite good companies, but you get businesses in there which are not good. And that does happen sometimes. Just like you occasionally get sectors where they're bad sectors, but there's a good one. Let me give you a couple of examples, out of there. If we looked at in consumer staples, which is a sector that is generally good, and we looked at Kimberly-Clark, a company that makes toilet tissue and kitchen towel and tissues and so on. It's not a great business, I'm afraid. The business of making paper towels isn't something where there's a great deal of brand loyalty. I don't know how many people go down the supermarket and feel they've got to buy Scottex, so they've got to buy cleaning. They just want a paper towel. They're really not concerned about it as much as they would be if they put this into their body, right? If it were to have food and drink and medicine and so on. It's not got the same kind of brand strength. And, it's in the consumer staples, but it's not great, is it? And then you mustn't get hooked up on sector descriptions. Sometimes people will say, well, do you invest in chemical companies? Go, no, terrible. But you owned a company called Sigma Aldrich. It was taken over. We did own it. It wasn't really a chemical company. What it was a company. Yeah, it literally made chemicals, but it made little pots of chemicals, which it supplied to biochemists doing experiments and tests. And so they were trained as biochemists to use its catalog, its online catalog. So when they got an experiment or test to do tomorrow or the day after, they go on the catalog and order their ingredients, and the little pots turn up with all the stuff. That's what they supply. And what they're really in is in the fulfillment business. They're supplying stuff to help you do. They're supplying the stuff that you don't really work out what the bulk cost of the container of chemicals is. You just want to know that it's going to be there waiting in the laboratory in the morning when you come in. And then, of course, the final frontier is they have a certain amount they supply, which is corrosive or poisonous or radioactive, and in other words, difficult. And that gives them an edge as well in terms of the ability to safely supply ingredients like that. And so it literally had chemical on the tin, but it wasn't really a chemical company. It was actually a company which had trained scientists to use its ingredients in experiments. And its average supply, it's not like a bulk chemical company supplying thousands of tons of phosphate or something. Their average pot cost $400 last time I looked. So it says it's chemical, but it's not really. So you've got to be careful about those. The ones that cross over that are in a sector that's good but are bad, or in a sector that's bad, but there's the odd good one. You have to be careful.
So when I look at your list of top 10 holdings in your flagship fund, and I see things like Meta and Microsoft and Novo Nordisk and Stryker, and which I think you've owned since the inception of the fund 14 years ago, or L'Oreal, or Automatic Data Processing, Visa, Philip Morris Waters, and Alphabet. Can you take a couple of those that kind of illustrate what you're looking for in a business that sort of embody what you love?
Yeah, I know. Let's take a couple of words. Microsoft, it's the world's leading supplier of computer operating systems. Your computer probably works on it. My computer definitely works on it. The vast majority of business computing is done using its operating systems. If you go back to when we bought it, that was its leading business, Windows, and it had the servers and tools, professional business. It had a change of management, which we were hoping for shortly after we bought it, and its new management took it into other things which were linked into here. So, it's now vying with Amazon Web Services to being more a leader in the provision of cloud computing services. So, using distributed computing rather than having the computing sitting here on our desktop, using the cloud to back up our information and process it and do it on a common platform is something which is they've basically been one of the two leaders in since that thing. They're also a leader in gaming. Although they screwed up the mobile telephony thing and handed that to Apple, basically. That was before we bought it. And they have actually made a comeback in business computing in terms of mobile devices with the Microsoft Surface, and so on and so forth. And, we'll see where they go in AI. But all of this is built into a company which has regularly produced high growth in revenues and high returns on capital. I'll tell you what they are while we're talking. Give me a second. I'll just log on to my system and tell you what.
But also, what's relevant, Terry, is you bought it during a period where it was out of favor. So I mean, you often talk about this issue of valuation with quality companies. There's a very interesting thing, a chart that you have in the introduction to your book, Investing for Growth, where you talk about how you would actually have been justified paying a 281 PE for L'Oreal back in 1973, or 126 for Colgate, or 63 for Coca-Cola. So you're willing to pay a reasonably high price for high quality, but then there are things like Microsoft where actually you bought it when it was really undervalued. Can you also talk about how you think about this issue of valuation when it comes to high quality growth companies? Because it's very thorny, particularly at the moment with a lot of the Magnificent Seven.
Yeah, no, I mean, for a really good company, we are very bad. One of the things we're very bad at is estimating the impact of compound returns as human beings. When you look at the difference between a 10% and 12.5% compound return, the difference over 20 or 30 years isn't 25%, right? People don't realize that actually it quadruples the capital value, that differential. Wow. And we're very bad at that, unless you sit down and compute it yourself. And so people don't figure that out, I think, very well, which means that commonly things which are able to make persistent high returns and growth do not get full valuation. L'Oreal is a great case in point with that particular calculation. It's astonishing. But if you look at that table with L'Oreal, you could have paid 100 for Pepsi, 100 times P for Pepsi in that. But look, like I said, as much as we acknowledge that, and we do acknowledge that markets, whilst they're not completely perfect, aren't completely imperfect either. They generally, on average, they price good companies better than bad companies, right? And so we're going to have to pay a higher price for our good companies than the average. People keep coming along, it's a bit sweaty. Yeah, well, it's going to be because it's a better company. But once in a while, some form of madness overtakes them, and they offer you something which they really shouldn't, right? It's kind of like, how does that? So we started buying Microsoft when it was $25 a share. It's 420 something today, right? And it's been in our top performers 8 years running. This shouldn't happen with a company this size. It was trading on a P of about 8 when we bought it. Because, Steve Ballmer, I don't know Mr. Ballmer, I don't really want to be critical of him, but he hadn't been a happy period when he was there, and they'd missed out on the whole mobile telephony thing. Then they bought Nokia, and that had been pretty disastrous. And they bought Skype, which had been pretty disastrous too, which is ironic given that Teams is now such a success. And so there we were. And when we're looking at things like that, so we look at something like this, it's a company with returns on capital around 30%, right? And revenue growth now, it's been coasting about 20% for a long period of time. And this shouldn't happen. If we think we found one of these, and we have found them in China, we found it in IDEX, in Equity Equipment, we found it in Microsoft, we found it in Domino's Pizza back in the day. We sit down and think, are we missing something here? And what we tend to do as a sort of check on sanity, as much as anything else, is go and look at what the detractors are saying. What are the detractors saying? What are they saying is the reason? And I remember an awful lot of the Microsoft stuff, roughly speaking, just said, well, it's not Apple, is it? Well, no, it's not, is it? we figured that out all on our own. Very famously, in my view, the Financial Times Lex column, and I do know which journalist wrote it at the time, but obviously they haven't got a byline on it, unfortunately, said when it was $26 a share, nobody should own it at this price. And they were right, but not in the way that they meant it. And it's like sometimes when people are just absolutely mad about things, about you shouldn't own this, you do get this opportunity where a large, very good business gets offered to you at a price where you just should get. Meta was another one after the Cambridge Analytica thing. Meta was a gimmick in terms of, it's gone up 500% or something like that since that point where we owned it. And, we received a cacophony of invective from people about how we shouldn't own it. I mentioned I quote my previous annual letter, this year's annual letter, saying, I'm almost thinking of having a fund that just buys the one everybody tells me not to own. Because they're working off emotion and anecdote, right? People are saying, nobody's using Facebook anymore. I remember saying, nobody's using Facebook anymore. I said, oh, right, okay. Where do you live? Well, Tunbridge Wells. I said, oh, and how about in Jakarta? Are kids using it in Jakarta at all? Well, how would I know? I said, well, I think that's kind of more important, don't you, than Tunbridge Wells? And by the way, so your kids are not using it anymore. What are they using? Instagram. I said, you do know they own that too. People, the plural of anecdote isn't data. No, just deal with the facts. There's an old TV series from the 50s called Dragnet. And the detective, whose name I can't remember, would always be interviewing a suspect, a witness to something that had just occurred, a murder or a robbery or something like that. And they'd be gabbling and he'd say, the facts, ma'am, just the facts. Can you just?
It was a very nice thing, and I think it was in Investing for Growth, your book, which collected your letters from the first 10 years of the fund, where you quoted the Simon and Garfunkel song, "The Boxer," where you said,
and here's what he wants to hear, disregards the risk. Yeah, I mean, look, you can get an awful. I'm quite serious now. You can get an awful lot of stuff from the movies and from song lyrics, because people spend quite a lot of time sometimes on movies and on film lyrics, and so sometimes they've got a bit more meaning than just somebody, Simon and Garfunkel, playing a nice tune. I mean, one that we quote all the time is the movie All the President's Men, about the Watergate affair. And the bit where Deep Throat, who's the FBI deputy director, I don't know what it is, but he's giving information to Woodward, paid by Robert Redford, and he meets him in the car park. And one of his critical piece of advice is follow the money.
Yeah,
the money. If you want to know what's going on, just follow the money, right? And there's lots of examples of things like that. You know, we play to ourselves clips when we're explaining things day in, day out. There's the bit in Casablanca where the gendarme goes to close down Rick's Cafe, and he blows his whistle and he says, "This place is closed down. I'm shocked to hear there's been gambling here." And one of the waiting staff comes by and goes, "You're winning, sir." Whenever we read one of these things about, yes, apparently somebody has been bribing people to do business in Nigeria, we always play the Casablanca kit, right?
I remember Howard Marks quoting to me Clint Eastwood in Magnum Force saying, "A man's got to know his limitations."
I quote that one too all the time. A good man knows his limitations. When he's told by the chief of police, he's being asked to deliver the ransom to the bad guy. And he says, "We don't want any gunplay from you, Callahan." He said, "I was a cop for 20 years and I never ran holes in my weapon." He says, "That's good. A wise man knows his limitations." It's a great quote.
Yeah.
Yeah, the America is littered with great quotes that you can learn something from, in my view.
So this idea of how people hear what they want and disregard the rest is really important. And you've operated in a team for a long time, right? You've had Julian Robbins, I think you've worked with for 38 years, and he's your head of research, and he helped you co-found the firm. And you sometimes talk with him as your designated successor if you retire at the age of 145. And
young Mr. Robbins, as he's known then.
Yeah. Tell me how it helps to have a partner like that, because I see this a lot, right? Look, Howard Marks talked to me about Bruce Karsh, Joe Greenblatt talked to me about Rob Goldstein. I've interviewed Charlie a lot, right? Who, obviously was the abominable no man for Warren. Talk about how it helps in terms of just dealing with your own blind spots and potential biases and the like, to have partners.
Hey everybody, it's Clay Fink here, host of We Study Billionaires. Here in a few months, Warren Buffett will be hosting the Woodstock for Capitalists in Omaha with the Berkshire Hathaway Annual Shareholders Meeting. The meeting welcomes over 40,000 investors that head to Omaha to tune into the marathon Q&A session with billionaire Warren Buffett and Berkshire managers. Since we don't know how much longer Buffett will be around to attract tens of thousands of people, I would highly encourage you to make the trip to Omaha during the first weekend of May. While I personally love sitting in on the meeting, what makes the trip extra special for me is the relationships that are built around the meeting, which is why I'd like to briefly tell you about the events that TIP will be hosting. My colleague Sean O'Malley will be hosting 2 free socials for the TIP audience on Friday and Saturday evening, and more details on that can be found in the link in the description below. And I'll be hosting a couple of dinners and socials for our TIP Mastermind community, which is our paid community for private investors, portfolio managers, and high net worth individuals. Attending the Berkshire meeting on your own can be quite a lonely experience, and I wanted to personally invite you to join the events that Sean and I will be hosting. Again, details on the free events can be found in the description below, and to apply to join our TIP Mastermind community, simply go to theinvestorspodcast.com/mastermind. That's theinvestorspodcast.com/mastermind. We'll also be sure to get that linked in the description as well. Additionally, flights and hotels can get booked quickly, so I'd encourage you to book yours as soon as possible if you plan on attending. And please feel free to email me or shoot me a message on LinkedIn if you have any questions. I would be more than happy to help. Hope to see you there. For decades, real estate has been a cornerstone of the world's largest portfolios, but it's also historically been complex, time-consuming, and expensive. But imagine if real estate investing was suddenly easy. all the benefits of owning real, tangible assets without all the complexity and expenses. That's the power of the Fundrise flagship real estate fund. Now you can invest in a $1.1 billion portfolio of real estate starting with as little as $10. 4,700 single-family rental homes spread across the booming Sunbelt, 3.3 million square feet of highly sought-after industrial facilities thanks to the e-commerce wave. The flagship fund is one of the largest of its kind, well-diversified, and managed by a team of professionals. And now it's available to you. Visit fundrise.com/WSB to explore the fund's full portfolio, check out historical returns, and start investing in just minutes. That's fundrise.com/WSB. Carefully consider the investment objectives, risks, charges, and expenses of the Fundrise flagship fund before investing. This and other information can be found in the fund's prospectus at fundrise.com/flagship. This is a paid advertisement. Hey guys, do you ever feel like you're juggling 1,000 things all at once and that your life is constantly unorganized? As a host of this show, I oftentimes felt that way, and that was until I picked up the remarkable Paper Pro. Nowadays, thinking smarter and thinking better can give you a leg up like we've never seen before, and Remarkable's vision is to help you do just that. The Remarkable Paper Pro is a beautiful, minimalist paper tablet that looks and feels just like paper, but it's packed with many amazing digital features, helping me sort out my work life by putting a lot of it on this one-of-a-kind tool. For example, when I'm analyzing a stock for my portfolio, I can jot down notes on the company as I read their reports, or mark up the company's report itself with what sticks out to me. Then I can share my notes with others and organize them however I'd like on the tablet. In a world with constant distractions and cluttered workspaces, the Remarkable Paper Pro is an absolute must to work smarter and more effectively. It also has a high quality and premium design and feel, making it a lot of fun to use day to day. So give it a try today and thank me later. You can get your paper tablet at remarkable.com. That's remarkable.com.
I think that Julian is very intelligent. He's also got a first in history, by the way, and very honest. And he's different to me. And amongst the differences are that he sometimes sees things in terms of the subtleties of what's going on that I miss. And he's got a very, very good way of pointing them out to me without pissing me off. Basically, he can get me to understand something without getting into a fight over it, and that's quite cool. That he just says, "No, I wouldn't buy that because of this." Have you thought about this in terms of? And he's almost got a way of saying, like, you're buying L'Oreal. He'll go, "Well, I think if you take the PE ratio, roughly, look at it in a mirror and add your car license plate, it's okay." And really, he's just duping me, right? I mean, and somehow he manages to get that. He might have a point about looking at it that way, and I go and buy it. And really, I realize, no, he just talked me into that, didn't he? He realized that if I hadn't been talked into it, I would always have been sitting there going, no, it's a bit too expensive, and then we'd never own it. So he just found a clever way of bloody spoofing me into it, didn't he? And he did, and he's got a great inquiring mind. He actually really likes the stock market, and he's lived in America for 30 years now, and he's got a wealth of knowledge about America and the stock market that he brings to bear in a way that I simply can't. As much as I deal with Wall Street and worked on Wall Street, and I'll never have that length and depth of knowledge that he's got.
You have a very interesting sort of emphasis on the US in what purports to be a global fund, right? I mean, when I checked the other day, I think it was 74% in the US. And obviously, there are these issues over where a company is domiciled and all the like. France is about 9%.
Sales in the US. We had a company that was US, and in that number, they had zero in sales in the US.
But it's clear that the US is a massive hunting ground for you. I mean, with all these companies like Microsoft and Meta. When you think about this issue of what makes the US special and whether this is just a sort of a permanent, if anything is permanent, advantage, or whether it's just another kind of pendulum swing, and sooner or later the pendulum will swing back to emerging markets or whatever else. What do you think? I mean, how, you used to have an emerging markets fund and then you closed it at a certain point. Like, is the US just a persistent winner?
We're right, by the way. We've continued in sense, we're right. Look, the US is the biggest economy in the world. Let's just start with that, shall we? Secondly, it has the most active capital market in the world. So when we're talking about where companies are listed, increasingly, as you'll see, much to the chagrin of people in London, companies are listing in America, which are not in America. So, I mean, given that it's the biggest economy and given that it's got the most active capital market, I'd almost say if you're doing what we're doing, why haven't you got more companies in America than it was? How does this work then, right? Because, if you are a company thinking of listing, if I'm thinking of listing, why would I think about doing it in London? The greatest depth of market, the biggest liquidity, the most investor attraction is in New York, isn't it? And then you think about how companies become big and very profitable companies. One of the things that helps American companies is that they get the opportunity to build their strength in the biggest market in the world before they move out and take on the world. So, whether it's in technology or healthcare or consumer and so on, they sit there and they become the dominant player there. Then when they reach out into the wider world, it's very difficult for people to compete with them. When Coca-Cola and PepsiCo arrive in the UK, do you really think that Britvic are going to give them a run for their money? And once, so that's in their own market. How about once we get it to an adjacent market? So in Europe, how's Britvic going to do there against Coca-Cola? When they're like a boxer who's pumped up in the gym, who's been fighting. He's been in the Crank Gym in Chicago, fighting the best heavyweights in the world in sparring, and then he comes out and he's finding a hometown fighter somewhere in another country. Like, I wonder how this is going to go. So you just got to bear in mind, it's the biggest economy with the biggest capital market, and the companies, the Coca-Colas and the Microsofts and the Strikers and so on, have had the ability to build a fantastic base there before they move out into the wider world and take on the local competition. Then you get on to other factors as well when you look at the world at large. Europe, the great saying is America innovates, China replicates, China or Japan replicate, and Europe regulates. I mean, some of the stuff that's going on in Europe, like the Digital Markets Act, they may as well put up a sign here saying high tech not welcome, I would say. And it's kind of sad if you see what's driven the market in recent times, because, look at the heights of technology in terms of the companies. And I know I am, a million other people go, that's a bit worrying in terms of the size of their domination of returns. But what's the biggest UK technology company?
God knows. There's nothing really famous, is there?
Well, I'm talking about listed in the UK, Sage, an account, which, by the way, is a good business. I've got nothing against Sage. Please don't take it as that being. It's a very good business, in fact. But that's it. An accounting software company based in Newcastle is the UK's biggest indigenous software technology company.
And I'm embarrassed to say I've never even heard of it. So I'm based in New York and I've never heard of it.
It's funny you should say that. We happen to know that when they were looking for a chief executive, by the way, this is not meant to be in any way a criticism of the current chief. I think he's a good guy. But he's an internal appointment. The reason he's an internal appointment, much than anything else, is they went out to headhunters to try and get a CEO. And when would you start? If you were looking for a headhunter for a software firm, you'd start in Silicon Valley pretty much, wouldn't you? So they got a headhunter there and said, go around, see if you can find any COOs or number twos or whatever would like to step up. And the response you just had is the response they got from everybody.
Oh.
They never heard of it. Never heard of it. I don't think that Europe is about to overtake the United States in any of the areas that we've identified as being good businesses. No, I can't see any. Anyway, China is difficult because you don't truly own the business, right? I mean, you are actually in partnership with the Chinese government, for good or ill, particularly in the high-tech businesses. And Japan, at least until very recently, businesses weren't run for the benefit of shareholders. They were run for the benefit of the employees and the wider Japan, as it were. Returns on capital and things like we're discussing were like, okay. So that's why we haven't got very much. It's not that we don't like them. We actually have a bit of a soft spot for European companies in the industries that we like, which are run by families and have a very long-term perspective. So if you have a look in our portfolio, things like L'Oreal, LVMH, Atlas Copco, we do like them. But they're rare. They're rarities. Sorry, I interrupted you there. Go ahead.
No, I was just wondering because I mean, it's interesting that this is a discussion between two Englishmen who are not living in England. So that tells us something about
not a coincidence, that is it?
Right. I mean, and both of us, I think, love England and love being there, but there is a dynamism when you move out, certainly when you move to New York. But when you think about the future of the British economy, when I go back, I sometimes feel like, I mean, I only really go to London, and I'm no doubt going to annoy lots of people here, but I feel like it's almost become a kind of playground, at least in the areas I go to, which are not that representative. It's become a playground for the foreign rich, right? It's not really dynamic as an economy. It's more a really wonderful place for other people to come and spend.
It's true of London, I think, and I'm a Londoner, so I feel strongly about it. I think it's the greatest city in the world, probably, but I'm obviously not exactly objective in that opinion. And it's sad. I think that what you describe is at least partly true. Well, that really explains the British economy and where it stands for. I think also what the British economy has been good at in terms of innovation, and it's got a great record of innovation in healthcare. It's got great drugs and other areas. It's got it in technology in a number of regards. ARM in terms of low power chips for mobile telephony. They dominated that over time. It's got it in a number of brands as well. That it's over time that it's developed, which would be very good. But it's I think that the problems that it exhibits are, in the end, I think there is, in my view, an anti-entrepreneurial, anti-kind of capitalist, whatever you want to call it, spirit abroad in the UK, and it's been problematic, I think, for a very long time. I think one of the biggest differences with America, and like you, I love New York. I had an apartment in New York for some time and spent a lot of time there. Is I think on the whole, and I realize this is a generalization, Americans wish to emulate success. Britons wish to destroy it or criticize it. And that's my take on it. And I'm afraid, I don't think that's helpful, really. We've got to learn to appreciate people who are successful and applaud it and wish to emulate them and multiply it, not bring them down in some way. So and the other thing about the UK is I think you're probably right about London, but once you go outside London, the thing that becomes evident to me is a number of things. One of them is being somewhat hollowed out. I mean, the industries which we used to rely on for manufacturing have by and large gone. But going back to what I was saying earlier about progress, that's not new. If you take the textile industry, it originated in the north of England, the Industrial Revolution. Then it migrated to America in the Northeast after the Civil War. And then it migrated to places like Hong Kong. And then it's migrated from places like Hong Kong to places like Mauritius. And then it's become a middle-income country. It's gone to places like Ethiopia and Cambodia and Madagascar. And it keeps moving. And you have to move on yourself. It's no good saying, well, I think I'm not lamenting the absence of the textile industry from the dark satanic mills of Northern England. You have to move to new industries. But you do need to move to new industries. You don't need to have half the population employed by the public sector, which it is. That's not going to be helpful, right? Because they aren't actually going to create anything whatsoever. Here's a statistic for you. The poorest state in America is Mississippi. Okay? And the median income in Mississippi, and I can give you an exact figure, but not on this call, but is about $44,000 US. Yeah? That's the same as the median income of the UK. What went wrong? Because something's definitely gone wrong. I mean, think about, because I think one of the things that strikes a lot of people when they travel around America outside of the main conurbations is how poor America is once you get out of the boonies. Well, yeah, but the UK is pretty poor all over, Outside of those enclaves of London and a few other major cities, the UK is as bad as not just America, but the poorest state in America. I'm not being party political in terms of my views on this. My view is if I don't vote elections in the UK, I'm not on the electoral register, but if they had an election and had a draw, they could bring me and I'd let them know which way I would have voted. Because that's my view on them, essentially. But both sides of the divide in the UK seem to me to have a rather large responsibility for this lamentable state of affairs. Yeah.
There's certainly a tremendous dynamism in the US that I think I definitely remember when during the financial crisis when obviously the US kind of triggered a lot of the world's problems and everyone was gleefully saying well, the US is finished and now things, and if you lived here you just had this sense it's so dynamic and the flow of capital to good ideas is so quick.
But the willingness to deal with things when they go wrong, I quoted in my letter, I said, We had Unilever, where we had a battle that lasted many years. I mean, you could say through 2 CEOs to try and get the place straightened out. In comparison with Nike, the chief executive screwed up the bricks and mortar. He's gone. Right, that's it. And as people are all terrible, I don't think it is terrible. One of my mantras about running a business is I don't think you should ever be allowed to fire people unless you've been fired yourself, right? Because you need to know what this feels like, right? And if you're going to sit in a room and you're going to actually fire people, you need to be able to talk to them from a position of empathy, I think, in my view. So I'm not in favor of just, going like a chainsaw at people, but I am in favor of dynamism. And dynamism only comes, that you're describing, in part from grasping not just money going for new ideas, but also how to deal with problems. The dynamism of changing where people are living, what jobs they're doing, who they work for, the US is in another league, I think.
I think you're unusual also in that you've not only been a very successful stock picker, but you were actually a very successful CEO. I mean, you've been a CEO of 2 public brokerage companies, one of which I think you built into having about 3,000 employees, and the other you floated, and there were lots of mergers and demergers and the like. And this is back in the 1990s and 2000s, and it reminded me when I was reading about your past as a CEO of the quote from Buffett, where he famously said, "I'm a better investor because I'm a businessman, and a better businessman because I'm an investor." And so I was wondering if you could talk a little bit about what you learned as a CEO that's helped you as an investor.
Yeah. I mean, look, one of them is that change requires time quite often. Notwithstanding me saying, acting quickly is good, because even if you act quickly, you've still got change to implement. You might change the person, you've got change. And quite often money and effort and lots of other things. That I've got a very good friend of mine who's got a steel business in the UK. And he said, when he was a quoted company, which he's not anymore, he went private, and that was it. He said the analysts ringing up, asking him about how to change things, reminded him of the 40s, but it's funny when he said, they think that I've got these 2 buttons on my office wall, a red one and a green one. When I come in the morning, I press the green one, which is labeled make money. And then when I put my coat on to go home at night, I think, must remember to press the old red button. And he said, it's a bit more accomplished. We've got to design products, we've got to get orders, we've got to build molds. Right. And I think unless you've actually done that, it's difficult to understand. I mean, it's like people who sometimes come out of running a fund and then try and build a fund management business. And I said, well, it's like when I was head of research at UBS. People used to come to me because one of our analysts was a very heavy guy, had been a hammer thrower at college and put on a lot of weight. And when he sat on the toilet seats, he used to break them because, they stand on these little blocks. They're up there. This guy, if he wasn't careful, and people would go and say, I just cut my ass on the toilet. He just, and I'd have to say, could you just sit down a little bit more carefully? Because I've got people keep coming in. It's like, the way I would put it is the day job isn't glamorous when it comes to managing businesses. So quite a lot of the day job isn't sort of striking a pose like Rodin's The Thinker and having great strategic thoughts, right? It's actually about execution and implementation. And a lot of execution and implementation does involve dealing with toilet seats and the like. It just does.
And it's not that different with your investing, right? With your investing, you've talked about how so much of it, you have these grand theories and principles and stuff that are kind of timeless. But then there's the blocking and tackling day to day where you're listening to conference calls and you're doing modeling of, free cash flow.
I say to every new recruit that we've had, with some success, but not universal, I say before they begin, I use the example phrase, the day job is not glamorous. What we do is not sitting here having great thoughts on investment. I said, we don't sometimes have one for a couple of years or more at a time. The number of Microsofts and indexes and things that we pull out there is relatively rare. And if you've got one, we'd love to hear about it, but we don't, when you got 3 in the first week, we're going to get a bit suspicious. The reality is it's about modeling and collecting data and listening to calls and writing up notes and looking so we've got a record that we can read back through and read what's gone on historically. And that's really the vast majority of what we do.
And you told me right before we started recording about a sign that you had in the office. Can you tell us about that? Because in a way, it embodies this mindset of kind of dogged incremental progress and not screwing up.
I put up the 5 Ps, so 5 uppercase Ps in a frame. And the 5 Ps stands for preparation prevents piss poor performance. Don't turn up for something without having prepared. don't go to a company meeting and you haven't read the last results and the note that you wrote before, you know? And it originated from a time when I was in broking, and I went on a trip to Scotland when I was at UBS head of research with the CEO and a salesman. The salesman, I'd come from another broking firm, and I'd looked at our Scottish client figures and they were terrible. And the salesman said we were number one or top three or something in Scotland. We clearly weren't. And so we decided we'd resolve this by going to Scotland. Why not? And we were there having a meeting with the general accident, as there was in Perth. They were lovely guys. I knew them. But, you know, they were lovely guys, but with that nice steely, you know, sort of bit in the middle that you get with the Scots, which is good. And they were having the conversation about what they thought about the service. And they said, well, what do we think about the service? How much did we pay you last year in commission as a broker? I kind of looked at the salesman and he said, I don't know. I said, you don't know? They said, well, we paid you £4 million or something like that. All right. They said, how much did we pay you the year before? I don't know, either. 5 million. So they said, all they were telling us was, they were giving us, never mind sitting in meetings like this or filling in surveys, they were voting with their wallet, right? Anyway, I came out of the meeting and I said to the CEO, I would fire that guy. I said, going to a meeting with you in the room, never mind me in the room, and you don't have the basic information on the client to add is just a no-no. I mean, that tells you right off the bat what we're dealing with here. And it's like, you know, there is no excuse for that. There's no excuse for turning up to interview a company, be interviewed by an investor. You know, if I'm being interviewed by an investor, if you were, coming on and say, Terry, I want to interview you about my holding in Fundsmith, and you go, well, how much? Do you know how much I've got invested in Fundsmith? No, I haven't actually got a clue, William. How much have you got? It would be a bad start, wouldn't it? When did I invest? I don't know, actually. We've got data on this, but if I hadn't taken the trouble, have you made money or have you lost money with me? How much money have you made? You know, have you been putting money in or taking money out? And the idea of turning up without doing all this work is just preposterous in my view.
I sort of wonder if, when I look back at your youth, right, where you came from this poor background, and then, you're like this working class kid going to university college in Cardiff, and then you get your MBA, but it's not from Harvard or Wharton, right? It's from Henley School of Management. I'm wondering if there's something about having been an outsider and having to fight for everything that you've done that's been really key to your success. But I wonder if there's something very central to your success that you've had to kind of scrap and be tenacious and work harder, and you were always sort of this super competitive outsider. Does that resonate with you?
Yeah, I think that's pretty accurate, actually. I think that's a large part of this. I've never been part of whatever the establishment is. I mean, I suspect we've got a new establishment now that's replaced some of the old establishment at the time. I've never been part of that. I've never wanted to be part of it either, actually. It's never struck me that I particularly wanted to join any club or anything like that, literal or metaphorical in that regard. And yeah, I have always felt that I was a bit of an outsider, and I had to work for things. And I think it's probably a good thing on the whole to be in that situation. I had a conversation with somebody who we were having a dinner, and at the dinner was someone's son who was 8. And when the pair of us were leaving, and he said to me, if I had a son, I'd send him to eat. And I said, would you? I will. He said, why? He said, it's where everybody runs, the world goes. I said, I just don't see this as a great positive. I think, I would rather that he went to a very ordinary school and found out how the world really works. My friend, the steel man who I'm telling you about, it's a family business. He's a scion of a family that's owned it for several generations. And he refused to go to public school and put himself into grammar school. And I think it's to his credit, but also to his benefit. Because I think, when you're walking through a foundry and talking to people, you might be able to understand a little more what their issues are and what they're doing if you actually have been alongside them from time to time,
It's such an interesting issue. I went to Eton and I went to Oxford, but I'm a Jewish kid, from a family that fled from Russia and Ukraine and Poland. And so I remember going to a friend's house.
For an outsider, eh?
Yeah, exactly. Bruce Greenwald once said to me, oh yeah, the Jew from Eton. I mean, there were 10 of us.
Yeah. Yeah, I'm surprised there were that many.
I think there were a few who were pretending not to be. I think there were some who concealed that they were Jews. And so I think being an outsider, for me, being an outsider and an insider, somewhere between the two. So I'm comfortable interviewing anyone or talking to anyone because I was at school with people like Boris Johnson and David Cameron. So I know they were nothing really that special, right? You're not that intimidated because you...
Here's my Casablanca quote. I'm shocked to hear that.
They were very... I mean, Boris, I remember when I was a little boy. I mean, I was 13 and he was the head boy, and he was clearly incredibly charismatic and a big personality. But the idea that these sort of entitled, very bright Etonians who knew how to write Greek verse should be making big, impactful decisions about the future of the country, just because they'd gone to Eton and Oxford. I mean, it was kind of laughable if you knew them, because I knew what a fool I was, and I came top in English in my class. I mean, I was as smart as a lot of those kids, and I know that I'm a moron.
I think the ideal place, if you can get to it, and I don't think many do, is to be able to get along with and communicate with people, pretty much whatever their background. And if you're going to do that, I think then you've got to about the right place. If you can be at Buckingham Palace with Boris sitting alongside you having lunch, and I have been at Buckingham Palace sitting over there having lunch, and at the same time you can go to the boxing gym with the young black kids, then I think you've reached a good place, is my view. And I feel sometimes I'm fortunate in that regard that I can do both those things and not feel particularly out of place in either one.
It's interesting to me that one of your clients early on was Sir John Templeton, and you've talked in the past about going off to the Bahamas, to Lyford Key, to see him and Mark Kowalewska, his chief investment officer. And I write in my book about Sir John, because I went off and interviewed him in the Bahamas and spent a day with him sort of 25, 26 years ago. And in some ways, you seem to have kind of recreated his life, where you've gone off to Mauritius and you're sort of away from the madding crowd, thinking for yourself. Can you talk about, in some way, whether I'm right in thinking that Templeton somehow influenced you, maybe in the same way that movie early on influenced you, and you thought, oh, there's another way to do this, and also how it's kind of been an advantage to you to set yourself up in this very independent, non-tribal way, far away from Wall Street and the City of London?
I actually emulate Templeton in more ways than you might think, because he, as you probably know, used to walk in the sea every day.
Yeah.
I go for a swim out to the reef and back whenever I can, which is 2 or 3 times a week at least. And my colleagues say, "Oh, it's interesting. You're doing what?" And I do. Weirdly, if there's nothing else going on when I'm doing it, I do think about him. It's strange, isn't it? Just doing an activity similar to what he did in the Bahamas. But yeah, it definitely did influence me to see somebody like that at work. And I always remember very early on when he talked about how to react or not to events. He said, obviously we're talking way pre-internet. He said, the papers will arrive a day later. I get the Wall Street Journal the day after it's published. So by the time there's a problem, it's too late to panic. And he was making an important point in a trivial way about that. The events, we often write up in our daily news write-ups, we write to each other, and we look back over periods of time, sometimes only a few weeks, sometimes a few months and so on, and say, if somebody had gone to sleep on that day and woken up on today, and we've had all these events in the middle that happened where, terrible, great things have happened in terms of elections or wars or pandemics and so on. Since the market is at the same level, if they didn't look at any of the intervening events, I wonder what they would conclude. Nothing's happened. So was anything that happened terribly important then? Because mostly the answer is no. No, it's not. And I think he and Buffett, although I've never met Buffett and so on, from the way that he's explained it, it is valuable. And there have been other people, I think. They're not the only people who've done I don't want to be in the swim. I've talked to people who I know in the industry who operate from London or New York. I mean, I always say a lot of these guys need GPS to get outside at West 1 or SW1. I mean, they don't know how you do it, right? And I say to them, why are you there? And they go, well, I like to stay in touch with the companies. I say, you're an investor in Procter & Gamble, right? I said, yes, so am I. I say, they're in Cincinnati, right? And they're in West 1. And the other reality is, he's scratching, and they like to be able to go and talk to other people doing what they're doing, whether they're brokers or other managers, and they like to be able to meet them for lunch and meet them for drinks and pick up. And they like to compare notes on what they're all doing. And the reality is they don't really want to stand out from the pack too much, and which is fine. I mean, there's the old John Maynard Keynes quote there, the worst thing you can have from your career is to is to differ from the norm. Even if you're successful, it's still anathema to people. And that they mainly don't want to get that far out from the norm. And if you're trying to invest for the real long term, being in that is unhelpful, really unhelpful.
How do you actually structure your lifestyle and your ecosystem there so that you're able to operate in this very long-term, patient, independent, spirited way and sort of resist, even the pressure to think about short-term results and stuff in an increasingly short-term world?
We don't speak to any brokers, not one. We don't take any research from brokers. We don't speak to them. We do it ourselves. So we've got, why? Well, boxers are paid to fight, so they like to have fights. Lawyers are paid to have disputes, so they like to have disputes and prolong them. Brokers are paid on transactions. Guess what they like to do? We were brokers. I'm a broker, right? Julian was a broker. We've done this job. We know what's involved, right? We don't speak to any of them. We don't take any research from them. I get a small tsunami of stuff that comes through asking whether people can give me a service. The answer is no. So we don't take any of that. We're completely cut off from that. The fact that I'm in a different time zone helps as well. I mean, for the first 4 hours of the day, I don't have anyone outside Mauritius. I've got a dozen colleagues here who are awake. So I've got quite a large part of the day where I can mull over what I've read and what I've taken in the previous day and think if there's anything that I need to do about it or say about it or ask about it without any incoming whatsoever from people, And so that really does sort of, and also with regard to Wall Street, I'm going to switch off looking at things after I've been speaking to you. I'll go on and have a look at it, but I'll switch off unless there's something really, really big, something, Microsoft goes bust, give me a call. But, outside of that, don't bother, And so, the remoteness does help. The other thing about Mauritius in particular is, people talk about the world, and living in another part of it can be quite important, I think. I'm living in an island that's about 800 kilometers off the coast of Africa, which has got a majority Indian population. And you can tell almost everything you need to know about Mauritius from the national holiday system. There are 2 days a year for Christians, 2 days a year for Hindus, 2 days a year for Uyghurs, 2 days a year for Tamils, 2 days a year for Muslims, 2 days a year for the Chinese, plus National Day and the abolition of slavery. In other words, people talk about diverse societies. It's a diverse society, People in the street, if they don't know who you are, will speak to you in French, first of all, right? If you're white, and if you're black, in Creole, right? Those are the common languages here. And there are pretty good connecting flights into China and India. And we're in the same time zone as Dubai. And gradually, by various means, a different perspective on the world begins to enter your consciousness, I think, if you live somewhere else,
You've set yourself up in a very free and independent way. I mean, it's been a long journey literally a long journey. You're 10,000 kilometers away from London. But I mean, in a way, the fact that you weren't part of the in crowd, that you weren't sort of growing up, going to posh schools and then going to work in Mayfair at a hedge fund and stuff, has enabled you to kind of chart your own course in a very unusual way.
Yeah, I think it has. Yeah, you're absolutely right. And look, let's not rule out other things, luck as well. You need luck, right? But I had some mentors along the way. I mentioned a couple of them, and I had probably 2 or 3, 4 mentors along the way. I think when people ask me about careers and what to do, and they're all, they want to set up the latest fintech, I always say, get a job with an organization that will provide you with training, right? Take everything that they offer, and if you can, find a mentor, somebody who will teach you how this works, and in doing so, give you experience that you otherwise won't get, And sometimes it's quite painful. I mean, being mentored is not always a positive experience. You have difficult ones as well. I always remember when I was working in branch banking, and we used to have to balance the accounts. So the branch itself has a balance sheet for its operations, in terms of loans and deposits and everything like that. And capital that's we're operating on that's supplied. And you used to have to balance those and all the individual accounts there, the ledgers that went into it. And I remember the not being able to balance one of the ledgers, and I was a graduate trainee, and the manager's assistant took it off me and said, "Yeah, okay." Went into his office, came back an hour later, and went, "I've balanced it, and I didn't go to university." Right? Yeah. You do need people from time to time to tell you you should be doing better than this. It's not all people think, the whole world of positive reinforcement. No, once in a while, someone needs to tell you got it wrong.
Yeah. It's an interesting balance, right? Because in some ways, when I look at your life, I think, you're this tough, sort of indomitable guy. And in some ways there is you're obviously a very likable and charming guy and gregarious, and you've had people who've worked for you or with you for a very long time, for decades. But at the same time, you're clearly an intense and tough and slightly combative, scrappy guy. And I'm wondering how that works in the rest of life, out of business and investing, because I look at so many of the great investors. I mean, this is one of the things I often quote on this show. Charlie Munger said to me that what struck him when he read my book was just how many of them ended up divorced or separated. And I wonder, like, when you look back on your life, and obviously you got divorced, you've had contentious relationships in your life. How do you turn off the intensity that makes you very successful in work, so that then you can come back into dealing with a wife or a girlfriend or kids or whatever, and actually not have that same mentality kind of overrun everything?
I don't think, if I've got a problem in that regard, I don't think my problem is approaching the remainder of my life with the same approach that I approach business. I think I am able to see the two things quite separately and approach them differently. I think what is difficult, however, is when you get into situations which are very intense, no matter how much you think, well, no, this is home life and I'm going to cook dinner or bath the baby or whatever you're going to do, you may not still be able to get that out of your head. So, whether or not you can engage properly, sleep properly, is not something that you can just do by thinking about it. It does stay with you sometimes, and I think that can be problematic. It's not whether you're treating everybody like they're in work and you want to see their numbers and you want to get them to engage in PPP. That's not it. I don't think it's as simple as that. It's just as simple as, if you've had an intense time, it can be difficult to switch it off in you, and therefore whatever it is you're doing, you may not perform very well in relation to it. To the simplest level of sleeping, for example, or something like that. You've got something running through your mind. It may keep running through your mind, and you may not be very comfortable to be with at that time, and that's problematic. The other thing is, I think if you do things like run your own business, and you do run businesses, including your own business, and you do it intensely and successfully and all that kind of thing, one of the things that people who are with you have to buy into or not is you will do whatever it takes. And some people can't buy that. They want to be the center of your world, and you say, well, you can't always be that. I've got this thing over here that I do, and maybe you've got things that you do, or maybe you haven't. I don't know. But there are times where I go, no, I'm going to go and do that now. And they go, well, that's not very good, because I'd really like to go and do this. You go and do it. I'll pay. You go do it. But I'm going over here to do this right now. I've just, I feel I've got to do it because it's required. Right? And some people find that quite difficult to accept.
Where do you think that ferocity and intensity of drive and focus comes from for you? Is it just competitive? Is it kind of a bit like being a fighter, being a boxer? Or, where does it come from for you?
I think it comes from a balance of things. I mean, one is growing up in very bad circumstances. I think, you could say, well, there's lots of people who grow up in very bad circumstances. They're not like that. Yeah, but how many of them escape, as it were? And I think it mainly comes from that. If you you're in very poor circumstances, in bad weather conditions, and living in a terrible place, and it's quite violent, and one thing and another, it probably does breed within you a determination that's otherwise difficult to encapsulate with people. And I think that's it. It's when I went to see the kids in Mauritius who we set up the boxing gym for, and it was the girl that they got me involved in. Then people know I'm a bit of a sucker for these things. She won some fights and got a few trophies and so on. But her mother was a prostitute, right? I mean, she was living in a shack and so on. And they know that I'm like that. But anyway, I went to see her, and I went to see the club, and I saw their circumstances. And they said, "Oh, it's terrible, isn't it?" I said, "Yeah, I'm going to help." Yeah, I'm going to help. I said, "Let me tell you something." I said, "If you're looking for world champions, they come out of gyms like that. They don't come out of air-conditioned gyms, right, with drinking fountains, right? They come out of gyms where, basically, there's buckets of people spit into, and That's where they come from, right? Real grit. I mean, that forms some kind of iron in the soul, I think, and it does.
Yeah. How do you think about this whole issue of giving back and sharing and lifting up other people? Because I was talking to my mother yesterday, and I said to her, she's in London, and I said to her, I'm going to interview this guy, and I told her about you. And she said, I disapprove of him. And I said, why? And she said, he makes too much money, doesn't pay enough tax, owns too many flashy cars, a couple of hundred cars. And she's like, why isn't he doing more to solve society's problems? And I said to her, I'll ask him. Like, how do you think about that?
Well, first of all, I'd like to say that your mother, obviously criticizing a man's mother is dangerous territory, but she doesn't know how much tax I pay, with the greatest of respect.
Well, I'll introduce you to my mother. You'll find she's about as formidable as you are.
Great. We recruited somebody a while back who told me the story about his mother, and I said, I want to hire your mother.
Yeah.
I think she sounds like a perfect employee for us. So let's get it. And so it's funny you should ask that, because it will at least maybe in part answer your mother's question, which is to say that I believe that philanthropy or giving back or whatever you do, there are a number of things that I'm very strongly guided on by. It should be private, and it should be with your own money. I am anti to the point of disparagement with the people who go in for glitzy events, absolute return for kids kind of thing, and we'll have a big event, and we'll invite the Prime Minister, and we'll all bid, £1 million for a pair of socks or whatever the hell it is, and we'll give all the money to get. No, the reality of that is, first of all, you're doing it because it makes you look good and you feel good doing it. And the second thing about it is, you're quite often in those circles, the number of people who come to me go, well, I've got this charity and I want this, and you could take part and do that for me. And I go, so what's going to happen here is I'm going to give you the money, and then you're going to go up and front it up and do all this. And there's a certain degree to which I have to have people like that, because I'm not going to run any things, because I'd be extremely bad at it. Right? So forget caught in it. But it's kind of like, guys, what you're really saying is, can I pay for you to go and get credit? That's what in some cases. And a lot of people who raise money for charity, I think, first of all, they don't keep to my private rule. And secondly, they don't keep to it should be your own money rule. I try, by and large, to keep to both rules. And so, again, going back to your mother, she doesn't know what tax I pay, and she doesn't know what I do with my money. But I do give what I would personally regard as very significant sums of money to a wide range of things, not just boxing gyms for kids, but a lot of other things as well. I try to do it.
How do you think of the parameters? Like, because I'm assuming that there's something about helping to give people opportunity that resonates for you as someone who managed to get out of it. Like, how do you think about a good way to help people?
Well, that was another point I was going into. Private, with your own money, and in practical ways, wherever possible, that affects them in the way that you've just touched upon, which is opportunity and ability to grasp it. So I have a new wife, I'm pleased to say, and she has a stepson. I have a stepson as a result, and we've got him into school in the UK. I said, look, what do you want to do here? You can stay in government school and basically be trained in the underclass here to be a gas pump attendant or a gardener or a security man, or we could send him to the UK if he passes admission, obviously, and so on. And we send him to the UK. That's good. And he seems to be prospering, which is good. So what I've now moved on to is a scheme to take 2 Creole children per annum from Mauritius into the school, so that once we've got it full, we will have at least 2 children in every year in that school. Now, I'm sure you're aware of haven't been eating the price of schooling in the UK. By the time we take the fees, the new VAT, the uniform, the equipment, and the flights into account, we're getting into some reasonable dough there, basically. But the thing I really like about it is it will be of practical help to lift some of those group of children out of their background, to give them an opportunity. And this is the really important part, I think, some of them, I hope, will think of coming back to Mauritius to change the community in general, right? By the fact that they have the ability to hold down important roles in government or private sector and so on. And that's the sort of thing that really I like doing, I enjoy that a lot, because I can see the practical consequences of it. Now, I don't want them to name the Terry Smith wing after me.
Yeah. Yeah.
I don't need that story at all. In fact, in terms of getting these things to work, quite often does require some sort of input from the government to get schools to respond here and do that. So I say to them is, you can put your name on it. You can say, this great initiative by me. You're a politician. You love this, right? Put your name on it, right? I don't want my name on it. Right? So your mother's never going to be almost never going to be reading about me doing this. She might read that the president of the Labour Party of Mauritius has come up with this wonderful scheme to educate Creole children into UK public schools.
Yeah. But it's good to have a mother who holds us all to account. She'll listen to my episode and she'll say, "Yeah, I didn't like that one as much." To some, or that guy was great, or So having exacting parents is helpful.
My mother, apart from her lack of knowledge of my personal affairs, which is understandable, but she should perhaps try and say something before. It is, I think she's veering a little close to that UK dislike of success that I was talking about.
It's an interesting question. I mean, tell me about, obviously having grown up without money, and then over the years you become very wealthy, and you bought a couple of hundred beautiful cars and the like, and a yacht and stuff. And a lot of I write about this in the epilogue of my book, Richer, Wiser, Happier, where I talk to a lot of people who've won hit the jackpot financially. And my sense is that, as I would put it, the toys and baubles are kind of nice, but they only go so far. And that in some ways, the real gift of the money is
Worse than that.
Say again?
Worse than that.
In what sense?
The toys and the baubles actually get in the way of pleasure quite often. Owning things of that sort mainly is a headache. So if you've got a boat, you end up having a crew, and then the crew, somebody quits, somebody has sex with somebody else, somebody's found out doing something here, they run it into the quayside at the dock. And so, really, I've got to say the amount of real pleasure that one gets from doing those kind of things is not high in my view, right? So if you take the car collection, for example, I think buying expensive and fast cars, and I've got some expensive and fast cars, I have no doubt about that, but I've got a very wide range of cars. My earliest car is from 1903, and I've got a section of cars which are failures. I deliberately collect failures. And so, and the reason for that is I think that they tell us things. Why do we have postmortems on human beings? Well, it isn't just because doctors like messing around with cadavers. It's because if we die in suspicious circumstances or difficult to determine, they might want to know why, just in case there's a new illness or foul play and something needs to be done about it. And I like the idea of looking at cars. You look at other things if you want to, but I like cars that are failures and seeing what, if anything, we can learn. We can learn out of these things because it might be useful to learn something from time to time about how other people have screwed up in history.
Does it inform your skepticism about Tesla? Because it's interesting when you think of the Magnificent Seven, right? I mean, you own a bunch of them, but you've said that Tesla and NVIDIA wouldn't get through your quality parameters, and the Tesla probably never will. And I hadn't really made the connection that here you are a car expert, and is there some connection between your car collection, the failures, and your skepticism about Tesla?
Remember my Stern Business School, good company, bad company thing. Automobile companies are all bad without any kind of exception. Every single one of them, Toyota, Ford, BMW, Mercedes, the whole lot, right? They destroy value. If you really like them, you can go and buy them all on a P of 4 if you want. And they're Tesla on 99 times, right? It's a bad business. Why is it a bad business? It's very capital intensive. You have to build factories, right? Fairly obvious. And models development costs a lot of time and money. And then here's the problem. If I'm invested in consumer staples and you buy some toothpaste or cat litter or whatever you buy, when you run out, you have to go buy some more, right? And so that keeps, even in a downturn, you might eke it out, might squeeze the tube a bit better, might go and buy some cheaper cat litter, number 2 brand or own brand, I don't know. So that's a little bit problematic, but it's not big problematic. Whereas if you've got a car and you feel a bit hard up in a downturn, just keep the car. You don't have to change your car. I always quote Mr. Mahadu, who is my taxi driver here in Mauritius, who is an exemplar of this. He drove me around in his Toyota Axio for 360,000 kilometers. The poor chap died. And now his son's driving it. Toyota haven't made a bean off that car in 20 years, right? And it's still going strong, I can tell you. I see it on the roads floating around with his son driving it. It's a really bad business because what that means is that it's hugely cyclical. Unlike toothpaste and cat litter, when the demand stops, it just stops, right? And so it's huge capital involved, big development costs, and demand, which goes up and down enormously. And then you can get on to the other subjects involved, which is, so that's car companies. And Tesla's a car company, which is, are batteries the future of electric vehicle transport? I mean, I don't know the answer, but there's certainly some reasons to be skeptical about it in terms of range, in terms of use of depletion of resources, in terms of disposal, et cetera, et cetera. The hydrogen fuel cell as an alternative if there was any infrastructure. So look, put it all together, and I just think I'm a big sort of admirer of many of Mr. Musk's achievements in a lot of respects. That man's got energy and balls. There's no doubt about that. But I'm not sure cars is the way forward. I mean, if cars are the way forward, why don't you just go and round up all the other ones and buy them?
It's interesting. I mean, the fact that you've been collecting cars that date back to 1903 and the fact that you got a first in history all those years ago in Cardiff, like really informs you, your sense of wanting to own companies that endure, owning sectors that tend to, persevere and be valuable through good times and bad. I mean, there's some interesting through line there in your life.
Well, they got the 1903 is an Oldsmobile curved dash, just to let you know. It's not got a steering wheel, it's got a tiller that you steer it with. And it was the first mass production car. The Model T Ford was not the first mass production car. It's the Oldsmobile curved dash was the first mass production car. And there's history involved in that. There's history involved in the Model T Ford. The Model T Ford is a fantastic story of an industrialist and what he achieved. I think I've got one, and I think it's the stories behind the cars, in my view, are more important than mostly the cars themselves. I'm interested in the stories. I'm interested in the Ford GT40 from 1966 from Ford v Ferrari, and I've got one, and I like it. I can remember those episodes when I was a child of how Ford worked out, win on Sundays, sell on Monday, and tried to buy Ferrari. And not only did they not get Ferrari, but he sold out to Fiat and dissed Henry Ford. And upsetting Henry Ford was a bad thing to have done, really, because he had built a car that beat them. And in fact, Enzo Ferrari managed to cause the development of at least two cars by upsetting people, the Ford GT40 being one, and the Lamborghini being another. Mr. Lamborghini made tractors. He still does make tractors. They make tractors. And he bought a Ferrari, which didn't work, like they quite often didn't work there, and took it back to Ferrari at Maranello and said, this is wrong with the clutch, and that's wrong with the gearbox, and so on. And apparently, Enzo Ferrari said, what do you do for a living? He said, I make tractors. And he was like, that game was so upset. He went and hired a team of 6 young automotive engineers and designers, the oldest of whom I think was 26, and built the Lamborghini Miura and demolished Ferrari's road cars. Ferrari caused nearly as many cars to be built by annoying people as he did by actually making cars. I love those stories.
Yeah, you also have things like a 1968 Ford Mustang, right, which was the car that Steve McQueen drove in Bullitt, and you have, I think, the Aston Martin DB5 that James Bond drove in Goldfinger. So you're living out the movies.
I like movie cars. I think if you said, what are you trying to do with the car collection? I mean, it's about, there's a guy who's got a museum in Naples in Florida called the Revs Institute. And he's got a book called The Archaeological Automobile. And his thesis is that the car is the single most important object with which human beings interacted in the 20th century. It's not a bad thesis. And I think he's certainly got a point. And I think there's an awful lot of human development history in cars through the Model T Ford and industrialization and all those sort of things, the rise of Japan, the movies, TV shows, Morse's Jaguar, the Saints, Volvo. Their part in our consciousness is enormous, I think, and they evoke quite a lot with people. Quite a lot of it, particularly of a certain age group. I think you find people talking in motor museums. I've talked to a lot of people in motor museums about cars. Is they'll find families walking around and somebody will be in tears and they say, "Is there a problem?" I go, "My father had one of those." I remember as a child. It evokes emotion in them, and so I'm a believer in the stories. I mean. The one I like on the Model T Ford is Henry Ford, with the Model T Ford, put it on the production line. And in so doing, he cut the production time of a car from 12 hours to 93 minutes, right? And in doing so, he obviously cut the cost of production very significantly. Then he did the really clever bit. He cut the price. What most people would have done faced with that is just made more profit. He cut the price. In so doing, he took the car from being a plaything of the moneyed classes into something where he invented the middle class in cars, the middle class market in cars. Cars then were sold to doctors and bank managers and lawyers and dentists. He invented the middle market by doing that. It's just a fantastic story, I think. for a man who, going back to how people are viewed, a man who many would review as a sort of robber baron industrialist.
Yeah. Nick Sleep and Case Zakaria, who you may have come across, or from Nomad, who I wrote about a lot in my book, talk a lot about just seeing that scale economies shared model that they saw in Ford, and then they saw it in Costco, and then they saw it in Amazon. So it comes up again and again, this ability to resist, pocketing as much money as you can.
Yeah, I agree.
Is there anything you take from your history as a collector that you can actually apply to investing? Like, I assume it's sort of somewhat different art, but there's something in terms of the pursuit of quality that runs through both.
There's also the fact that most things will come around. Every time I've ever thought of buying something and I've thought, you know what, I'll give in. I'll buy a Lamborghini Diablo in black because the red one is never going to come up. Guess what happens 1 minute after you bought the black one? Oops, there you go. There's that. Also, don't trust auctions. So, I know from cars that I've been involved in an auction that people at auction put other people logged on to bid and let them bid against their car to get the price up. And so you don't trust what. It's the same with dealing with markets. Do not trust what you see on the screen in share price action as equaling reality. There could be a lot of reasons why that price is moving or somebody's dealing. I've seen more than one example. I think there's one coming up this weekend at Kissimmee in Florida, where there's a very important car for sale. Where if I were bidding on it, and I'm not, I would look at that and say, I wonder if there's anybody else there who is in fact the vendor. Because once the bidding starts and it's clear that somebody's committed to buying it, the vendor might use somebody to put in competing bids. Yeah. And you might problematic if he gets stuck with his own car. Well, yes and no, because if he gets stuck with his own car, they'll just ring you up later if you were the highest bid and say, that guy didn't come through with the money. Do you want to be good for your bid?
Before I let you go, Terry, because you've been incredibly generous with your time, I just wanted to ask you one final thing, which is actually about Sir Keith Park, who's this hero of yours, who was Air Chief Marshal. And one of the really tangible marks that you've left in the world is that there's now a statue of him in Trafalgar Square in the heart of London that was unveiled in 2010 because you led this campaign to get him honored. Tell us just a little bit about him and why his story resonated so deeply for you.
He's a New Zealander, and he came from New Zealand in World War I with the Anzac Corps, who fought at Gallipoli, which of course was utterly disastrous. And most people would have gone home then, I guess. He didn't. He volunteered for the British Army and fought in the Somme. He was invalided out from the Somme after being blown off a artillery horse by a shell, and was just unfit for the army. So he volunteered for the newly formed Royal Flying Corps, where he flew Bristol fighters and was credited with 18 kills. Quite good guy. He then transferred from the RFC to the newly formed RAF and won the trust of Hugh Dowding, who was the head of Fighter Command, who had a theory on how to combat German air power. The Germans had about 2,800 planes in the Luftwaffe. The RAF had about 650 fighter planes. So they were heavily outnumbered. And Dowding realized that what they needed to do was not try and win the battle. There were lots of people, as you can imagine, at that time, particularly Lee Mallory, the guy who ran the group in Cambridge, who were, let's give Jerry a bloody nose. We don't need to win the battle. We just need to not lose. This is a bit like companies. We don't need to own the best company. We just don't want to own any bad ones. So he would feed the fighters in penny packets, if you like. And it became a standing joke with the Luftwaffe pilots, as it were, sort of gallows humor, the bomber pilots, who, as the battle ground on, would say, oh, here they come again, those last 10 Spitfires. God, because they'd been told they'd wiped out their, and they hadn't. So they would always have some fighter planes in the sky, because Operation Sea Lion, the invasion order for the invasion of Britain, the first requirement was air supremacy, because they were terrified of the Royal, crossing the English Channel with the Royal Navy at large. So they had to be able to neutralize the Royal Navy from the air. They couldn't do that without air supremacy. And he was going to deny them air supremacy. Now, he needed a trusted associate who would implement that strategy. And that was Park. And Park did it to the letter. And people have wargamed Park's decisions over that summer from June through to October, roughly. He made daily decisions about deployment. And they never managed to significantly improve on his decisions in terms of trying to do it. He under intense pressure every day, did that. And of course, he was himself a fighter pilot. He'd been in World War I as a fighter pilot, and he flew his Hurricane OK1 registration around the airfields from day to day, at the end of the day, finding out what had happened, what was happening in tactics, what morale was like, what the damage was, etc. So he had that. Anyway, he won the battle. In one of those wonderful pieces that only the Brits could do, Lee Mallory then interceded with Churchill to say that Dowding and Park weren't aggressive enough. And so after they'd won the frigging battle and got Dowding fired and Park sent off to training command, right? Anyway, he was sitting in training command when they realized they had a bit of a problem with Malta. Malta was the key island for trying to stop the Africa Corps being reinforced from mainland Italy, and was in the way, and it was being bombed to hell and back. And so they put Park in there to man the air defense. Smiling Albert Kesselring, who ran the Luftwaffe, must have thought he was a very unlucky chap because he managed to lose to Park twice, with Park then beat him in bloody Malta as well. And he was a fighter. On his way there, he was being thrown in by a Bristol Beaufighter, and they spotted a German warship on their way into Malta, and Park insisted that they press an attack. They were nearly shot down. And he was a fighter. He would fight, but and he understood the men. There were lots of good photographs of him having Christmas lunch with the men and all that sort of thing. He would fly around the airfields and so on. Anyway, again, in typical British style, and it's something I much admire in his regards, he left at the end of the war, went off to Asia for the end of the war in command, went back to New Zealand, was mayor of Auckland briefly, and then just disappeared into obscurity and was gone. And there was a book by Stephen Bungay, the historian, who actually, fun enough, was a historian who worked in Lloyd's and insurance, turned to history, which I thought was the best book on the battle, the most dangerous enemy. And in it, he has this wonderful phrase. He says something that's really caught me. And he said, Park was like a wizard in an Arthurian tale. He traveled literally halfway around the world to defend the country, which wasn't even his own country. And then having successfully done so, he just disappeared. And he said there is no memorial to him anywhere in the world, neither in England nor in New Zealand. He said there's a Keith Park Crescent at Biggie Aerodrome. That's it. And my father was in the RAF, and I was a keen flyer when I was young. I used to fly gliders and planes and helicopters, so I qualified to fly all of them. And I guess being a historian, reading Bungay and with that background, I thought, I'm going to do something about it. And so I got the planning permission and I got the statue fabricated and I put up the memorial to him and got the Park family involved. Fortunately, the Park family supplied some very good members. His great-great-nephew was a movie guy and his great-great-niece turned up and pulled the cord to unveil it. The surviving Battle of Britain pilots all took part in the campaign and turned up for the events trial, because getting a statue put up in central London of a white, straight war hero is not exactly what you call easy in this day and age.
Yeah, that's so interesting. So in some ways, obviously there's this extraordinary heroism, and his historic role is really important. I mean, there was a wonderful quote from one of the vice marshals saying he was the only man who could have lost the war in a day or even an afternoon. So I mean, his role in actually defending Britain was hugely important. But there's also the aspect of him just being an unsung hero and him being an outsider. And I can see why that would resonate for you as well.
Yeah, it was. Oh, I think so. Yeah, I think absolutely so. It's interesting because when I was doing you can't memorialize sunrise without. So I went to New Zealand, I met the family, we're a very nice extended family. So this is what I'm planning to do. Do you approve? And so on and so on. They were all very supportive. They lobbied Parliament in New Zealand. We've got every party in New Zealand to sign a letter going to the Mayor of London saying that they wanted this to happen. That was all very good. And we got to the unveiling and invited as many of the family to come as could. And we got his great-great-niece to pull the cord with her and one about Britain. But I said, in the build-up to it, it was interesting. I said, what do you think about inviting the Germans to the ceremony? Because I said, in some respects, in a spirit of reconciliation, maybe we should. But I think you should tell me what you want to do. And they said, Uncle Keith never forgave him. Every day he had to make these decisions to send young men to their death. And it never left him. Right? And that comes back to you saying about him being an unsung and an outsider and hero. Yes, all those things. And he made good tactical decisions every day, which worked, and under extreme pressure over long periods of time. And every time he knew that he took those decisions, he knew he was sending guys who were 20 years of age, many of them undertrained, out to die. And he knew that, and he did it, because that was what his job was. But it didn't mean that he did it feeling very cheerful about it sometimes, I imagine.
Yeah. Such a rich and interesting story. Thanks so much for sharing that with us. And thanks for being so generous with your time and your insights. I just really enjoyed spending the last few days deeply immersing myself in the mind of Terry Smith. So thank you. It's been a great pleasure getting to speak with you.
What story to go with? It's about a car. And I think it's a car that exemplifies, if you were trying to get a link between cars and investment, and there's a video on YouTube, which you can look up, called How One Man Made the Perfect Car. Okay, I commend it to you. And are you familiar with the McLaren F1?
I mean, somewhat. I know that you have one.
Okay. What happened was Gordon Murray, who was the man behind the wild success of McLaren under Ayrton Senna and so on, literally decided one day, actually at Geneva Airport, I think, with Ron Dennis and so on, they'd never made a road car before. They were going to make a road car. And he decided that the basis for making it was they were going to make the best road car that ever had been built, and I would suggest ever will be built, given the way that things have moved on since then. And I think he achieved it. He made a car which is extraordinary. I mean, I've got a 1995 example. It does 243 miles per hour. This is a 30-year-old car, right? Okay, it's extraordinary. If you watch that, one of the things you'll find striking is he made a very fast car. It's also a very safe car because it's a carbon fiber monocoque and so on. And it's actually a practical car. It's got 3 seats and it's got luggage. It comes with a golf bag. You can get your golf clubs in it. I don't play golf. He never took any interest in how fast it was going to go. And if you remember my owner's manual, one of the things I mentioned in there is obliquity. Not aiming for the sort of objective. I say, I've been fortunate to meet an awful lot of very rich people. I can't think of one of them who got very rich trying to make money. They tried to make things and services. They tried to do things better than other people. They had an idea or an impetus to do things better than other people. And I think Henry Ford didn't want to make money. He wanted to make cars. And he wanted to make it better than other people make cars. And that's what got him to where he went. And I think that McLaren F1 is a perfect example of obliquity. It's a fantastically fast car. And when you think that was 30 years ago, making that thing, and by all accounts, Gordon Murray never once asked them to do any kind of calculation about how fast the car would go. It went fast as a result of how he designed and built it, not as an aim.
So in a way, I guess to round this off, it all goes back to the slogan on the ice cream truck. It's quality that counts.
I think it does. I think it is. And look, my view of that car is there will never be another car like it in the history of cars. I mean, the idea that you have this thing that does 243 miles an hour, it has no power brakes, it has no power steering, it has no anti-lock brakes, it has no four-wheel drive. The only thing that car has is you and the car. That's it, which is how Rowan Atkinson's car, Ralph Lauren's car, Elon Musk's car, and Bernard Beschreider's car all got crashed. The car is more capable than the person sitting in the seat most of the time.
Really interesting. It's been such a delight chatting with you.
I was back to the Magnum Force quote.
Yeah.
You could sit in that car and drive it, but you should be aware of something.
Yeah, a man's got to know his limitations.
I hope that is what you wanted, or something like what you wanted.
Oh, it's been a great pleasure. And one of these days I'll make it out to Mauritius and hopefully I'll actually see what it's like there.
Come without letting us know. We'd make you very welcome. And tell your mother that my check is going off in 16 days' time. And she would be shocked, rather like Inspector Renault in Casablanca at the number on it. I certainly am.
She'll be very happy to hear it. Terry, lovely meeting you. A real pleasure.
All right.
Take care.
Smart people diversify. So that's the truth. You want to diversify. Not only is the future unknown, the future is unknowable. So if you're dealing with something that's unknowable, diversify. And you need to start saving when you're really, really young. You need to start saving when you're in your 20s. It could be a small amount of money, but you just have to start saving.